Hi, Graham. Oh, Graham. Hi. Oh, can you hear me, Graham? Hi, Dudley.
Morning.
Good morning. You can hear me, Graham? Graham, can you hear me? Right. Okay. Wait. Yeah. Hi, Natalie. Good morning.
Morning, Ian. Hi.
How are you?
I'm good, thank you. How are you?
I'm fine, thanks. I'm fine, thanks.
Morning.
Good morning. Yay.
Sorry, sound wasn't working for a
That's
while.
fine. That's okay. That's probably the most important thing, that it works.
Yeah.
These systems are. Well, it's interesting. I was talking to someone yesterday who kind of one of the neighbors who said that she had joined. She's in her late 60s, and so she had joined this 3,000 people in the choir. She was in an online choir. There's 3,000 of them, and I was like, on Zoom.
Jesus.
And she said yes, and I was like, I need to know who your broadband provider is, because I barely have 10 students and it crashes. How did you guys get 3,000? So there you go. So people are all kinds of things. 3,000. So she's it's showing today. So she was saying, oh, if we wanted to watch it, I was thinking, I just want to see 3,000 faces.
Was that through a video call, Ian?
No, it was a Zoom. Like they have a choir practice, so they sing together.
Oh, what, through Zoom is that?
Through Zoom, yeah, through Zoom,
like,
yeah.
And they can see each other.
Well, I suspect she must mute all of them.
Yeah.
The choir mistress, because I suspect I think the only way it can work is that she sends them the recording. They can all hear her, and they're all singing, because there's no way, because I can't even understand if they all sing together via Zoom. It just, I'm sorry, I'm not going to see how. I mean, which is why I want to see it today. I think it comes out today, and I'll send you guys a link for the fun of it. Just to see. I'm really intrigued. I'm thinking, how? Interesting. So there you go. Anyway, yes, great. So we're waiting on. Let me just see if they're in the. We're waiting on Jane and Hannah. But how are you guys doing? How's it going? How are things? Busy, yes, right, of course, yes. I mean, Dudley, for you, definitely, with all this furloughing and everything related to kind of payroll, you guys would be very, very busy. It's cool. Great stuff. Okay, well, we'll start anyway. Forgive me, I have a bit of a. I mean, I haven't gone anywhere, so I don't even know I have something of a cold, or I'm not sure if it's. I don't even understand. We're all still in lockdown. We are trying to, just the usual walk, but yeah, and trying to homeschool as well. I finished teaching. My daughter can now do fractions. Well, when I say fractions, there's several levels of fractions. Some fractions, we're kind of there now. You know, half, quarters. We can add those. I mean, it's surreal. I just thought people knew those things. I just thought everyone knows quarters, half. I mean, come on, I don't understand. What's there to teach? But no, it's
a lot of patience.
Well, no. It's been tough. It's oh my god. I couldn't teach it
anyway. But I'm saying you must have patience.
Well, yesterday she just said to her mom, I don't want Dad to teach me today. No. So I kind of had the day off yesterday to prep, because I rarely have time to prep. So she's like, oh, she says that when you teach her, it's a bit, you're sometimes a bit firm, that you expect her to just know things that you've told her. And I'm thinking, I just thought that was what teaching was about. I typically expect her to remember. But anyway, there you go. Money is the problem. Money is the problem. I think because she can subtract. If you say to her, what's 100 minus whatever 56, she'll tell you. If you tell her what's, whatever, complicated things, 147 minus 28, she'll tell you. And I say to her, if I give you £2, if I had £2 and I come into your shop and I bought something for £1.50, how much would you give me? She just tell me something like £3, £4. So I think they're still yet to grasp what money subtractions are. But hey, we've got all that to get through. Cool. It's all fun. It's all joy. Cool. Great stuff. Let's kick off. So we've been talking, last week we talked about audit evidence. That was we spent some time looking at that. So I kind of wanted to, there's so much, when I say so much to go through, I want to talk about a few things, but what I want to start off with is just kind of just looking at that very briefly. So I sent you, I rushed to send you it overlaps with what I'm talking about today. So I move into talking about systems and controls. But I just want to very quickly, because this is the bulk of our work. If the more and more comfortable we are with this, I'll just share my screen. More comfortable we are with what's going on here, the whole thing becomes quite normal. You start to see there's not very much to the subject. It's just once you understand what the main components are, then you're there. So let me just share my screen. Right, so this was the last folder I just sent you. Sorry, I didn't send it with the first, with the initial folders. But it's just a quick, what's the word? Excuse me, it's just the first kind of, just going through, just highlighting some of what I talked about last time, because once you get this language, you're kind of there. So far, we've been talking about this audit process, that you're an auditor, you want to go into an organization and you want to, you've been tasked with, as independent adjudicators, so to speak, to confirm as best as you can whether or not the figures that they have, oh, here, James is just, as best as you can, whether or not the numbers, the figures, if you like, on the financial statements. Hi, James, if you're well. The numbers on the financial statements and the notes and the disclosures, if you like, are true and fair, if you like, are credible, that whether or not the external stakeholder who has hired you can rely on them. So, hi James, can you hear me?
Hello, sorry, my computer was updating.
That's fine, that's okay.
Hannah sent me a message.
Okay.
She said that she's moving house.
Right.
And she rang her internet provider to cancel it from next month.
Okay.
They cancelled it straight away.
Oh.
I know, so she can't get on this week, but she should be able to get on next week.
That's fine, that's fine. It's recorded. I actually forgot to send you guys the link for last week's recording, but it's on the same portal that it's in, but no problem. Thanks, James. This will be recorded. She can watch it later. Thank you. So,
thank you.
That's the first thing. So, so we discussed the fact that we have to kind of, we went through the ethics, we went through understanding our responsibilities of taking on this this engagement, and then we moved very quickly to talk about planning, and that process of planning, trying to understand the client and trying to understand their business and trying to understand where the risk areas were within their financial statements. For us to kind of sort of say that these accounts are true and fair. Now, where we are now, I know we talked about audit evidence, which is what I'm kind of going back to. In the process of trying to understand the client, we talked about the fear, the risk here is that we would give the wrong opinion, right? The audit risk. The audit risk is that we'll go in there and come out with the wrong opinion as to whether or not the accounts are true and fair. And to prevent that risk, we need to kind of understand what the risks are within the business. And so the audit risk, or what is the risk of us giving the wrong opinion? And that risk is composed of inherent risk, control risk, and detection risk. of course. Inherent risk, really due to the nature of the organization, the nature of the business itself, what they work in, what they trade in. And so that's what we want to spend a lot of time really trying to understand, if you like, what is the nature of this business. And so we know, for ourselves what we're dealing with. What we're now gradually moving into is this kind of understanding of the controls, really, because to a certain extent, oh, sorry, one second. Oh, my window's open. To a certain extent, if we understand what we want to do is, because we don't have the resource to test every invoice, if you like, two things: we're only going to be taking samples. So because we're going to be taking samples, the risk-based approach applied to all audit, which is what the standards require us to use a risk-based approach, means that we have to understand the controls. We have to test the controls to see whether or not the controls over the systems in the organization are working or are effective. And to the extent to which we can rely on the controls, that will determine how much physical testing we can do, or we need to do, forgive me. And that's kind of, if you get that kind of psychology in your head as to how we deal with it. So really, we will be testing controls prior to going into doing the actual audit, right? So we would, like I said, if the audit is in December, we will do the test of controls. We can go in anytime, right? Because we want to kind of, you remember our AEIOU, I want to kind of observe, if you like, the controls in place. I want to inspect. And when we talk about controls, we're going to see that we'll talk about system and controls today. It's a bit long. Well, not long, but a number of slides, but it's what it is. I'll try and bring it out a little so that it's not as dry as it, but it is fundamentally looking at what controls there are over all the different systems: sales, inventory, wages. And if we can rely on controls, so author people signing things, segregation of duty, to a certain extent, things being recalculated, having if you like, information technology, standing data already secured, then to a certain extent we can be sure of the output, if we can be sure of if we can rely on the controls. And the controls will tell us the level of risk: low risk, medium risk, high risk. And then we can then, based on that, if we can't trust the controls, then we probably will need to test a lot of things and physically check everything for ourselves. And then that just means there's more time, more money, and then before we can verify that number and be happy. So we then talked about this issue of well, how do we go in and do this? How do I go in and look at a number? There must be a structure, otherwise it might be random. So we have standards, if you like. The international standards on auditing give us clear guidance on the kinds of characteristics we expect. So I'll say that again: the characteristics we expect of those figures to have. And those characteristics, if you like, are assertions. If you like, the directors are asserting, the directors are saying that these figures that you see right here have these characteristics, if you like. And so not just the figures, this is not the numerical figures, but also the controls as well. So we test controls. So the key tests that we look at fundamentally are tests of controls during planning, to see to what extent we will carry out test of detail. So test of controls pretty much guides test of detail. So again, this is the thing. I'm talking, but hopefully I'll go through my slides and try and pick up anything. I might go quick or slow, but I am trying to cover both by what I'm saying. So we talked last time about these assertions and what were these assertions. And the more the more and more you're comfortable with these assertions, then if you like, then you start to get the thing. So the key point here is, like I say, that I'm trying to understand, to what extent the figures are true and fair. And how I can be sure the figures are free from material misstatement. So last time I gave you a mnemonic to remember these assertions. Can anyone shout it out wherever you are? ACCA, perfect. Thank you very much. ACCA, cover. Yeah, that's it. I think there was a P at the end, but it doesn't matter. But the key point here is these are these assertions. Now, these assertions hold for controls and for the actual test of detail. So when we're testing controls, we're going in for planning. I am still going to do systems of control, but I'm just really walking through so you can see how these assertions apply. Assertions, we're saying that these controls, the assertions apply to controls, but the assertions also apply to the test of detail, if you like. So controls, if you like, are there to ensure that things are running, or objectives are being met ultimately. So for example, here it says, I'm just going through an application. For example, if I was looking at the test of controls on revenue, for example, in terms of the controls, forget the numbers now. I want to make sure there is a control that every transaction did, if you like, occur. I want to make sure there's a control that each transaction has been recorded accurately. Now, it's just the control I'm looking for. It's fair enough. So I'm going to have to observe a few, and that gives me evidence that I can then take that sample and then extrapolate and say that each transaction is recorded accurately, even though I didn't test every transaction. But by testing a sample of transactions, then I can be confident, if you like, and then I will do a test of control to make sure that all the transactions have been recorded. If you like, I want to also make sure there's a control to also ensure that all the transactions have been recorded in the correct period. And literally, this idea of a control, literally, you can think of it as somebody going around, an internal auditor going around and literally doing the work of the external auditor internally to make sure. So imagine someone carrying out an external audit internally, just to make sure all the controls are in place, if you like. And then we come along and just do the actual. So this idea that there is a control to make sure that things are going to the debit and credit. So this is very much about classification, if you like. Debit, how do I know? I want to make sure, I'm almost asking the client, how do I know that you don't buy something and debit expense instead of asset? And there must be some control, there must be some check from time to time, if you like, over this. Then he will say to me, well, actually what happens is there is a code and the system will sort of flag it up. That's a control that, if you like, certain assets, if something is an asset, it goes into a certain code area, and therefore it always. So the question here is, I just want to test that there is a control to make sure that things are being classified properly. So again, typically, if I can't find, if you like, a control, then it means there's probably a weakness, if you like, in the system. Right, and I talked earlier on about risk, and the fact is that now I'm going to come back and look at the actual numbers. So I turn up at year end. As you can imagine, some assertions are more important than others for certain balances. I won't be looking, depending on, you can just use judgment. Imagine I have assets, non-current assets, and I only have one computer, literally one computer. And then I have inventory worth 10 billion for some weird reason. You can imagine or imagine that inventory is what's the word? It gets obsolete very quickly, maybe like phones or whatever. So you can see here that if I was having say a small machine or whatever as my non-current asset, you can see here, okay, existence, yeah, you do it quickly and you're off. But you can see the valuation. If I've had this computer for a long time, valuation isn't going to be really important for this small machine I have as a non-current asset, but valuation is going to be really important for my inventory. So the auditor has to decide that I have all these assertions, and I have to decide which. There's a ranking. I have to take I don't have all the time in the world, so I'm going to kind of focus on the key ones. Even though the pro forma has all of them, I might kind of go through them quickly first, the important ones, and then go through the others just to confirm, but spend more of my time doing the more important assertions. But the key point is I need to understand the client, I need to understand the accounts, and then you are able to do a much better job. So very quickly, just kind of applying it. I'm just applying it so you see again how it works. Last time I talked about how all these assertions depended on whether or not things were in the statement of financial position or things were transactional. When I say transactional, income statement, they occur, revenue occurs. It doesn't quite exist. Computers under non-current assets, computers under inventory, they exist. They don't quite occur, right? So you can see that they're kind of saying the same thing, but it's just the language. So existence, I want to know it exists. Accuracy, I want to know if it's been recorded. Accuracy, valuation, allocation, I want to know that, we could go on with inventory. has it been recorded at cost? If we're making the computers, we have direct materials, direct labor. Something you will see very regularly is this question of when you're in manufacturing, the production overheads are you're allowed under standard costing to allocate a certain production overhead to material and labor. How has that been arrived at? Is that a fair, appropriation or of overhead? Have you used a good ABC method or whatever it is? The key point is, are there any obsolete computers that need to be written down? So you can see, we talked about that completeness. Is everything in there? Again, like I said here, the risk here is always overstatement or understatement. With inventory, typically, because assets are just naturally assets, people just naturally will tend to overstate them. So I'm less likely to see completeness. I test for it just because people might be hiding things that should be on there, so I can then ask questions about. So they might feel I won't put it on there because if I have to put it on there, they're going to ask me questions about it. And typically for assets, it's typically still more about the rights. It's when I'm dealing with liabilities, I talk about obligations. But when the question is, you have an asset on your statement of financial position, yes, it exists. Yes, I valued it. Yes, all of it is there. But do you own it? Can I see the title deeds? Is there security on it? And to what extent are you at risk of losing that asset if you default, or something along those lines? I just want to be very clear on the relationship of the degree of ownership. And presentation. You and I know that, especially those in practice, that at the end of every set of accounts, you have a bunch of notes for absolutely everything, literally, even if they're the same notes that you reprint every year. But those notes are disclosures and must include things relating to things in the accounts. You have things that we must show that cannot be put in the accounts. So we'll talk about those later, things like contingent liabilities, maybe court cases coming up, non-adjusting events that you have to disclose, but you can't quite include because there's not enough probability of them happening, so we don't have numbers for them. So really important to sort of highlight. I just wanted to kind of bring you back again. So you told me already ACCA cover, and it's just very, very important to kind of constantly be using that language all the time. Right, great. So yes, we have done audit evidence. So naturally now our next step is, so we know what characteristics these things have to have. But before I start testing anything physical, any paperwork, I need to understand what's going on with controls. So as you can imagine, this next chapter that we're going to look at really focuses on controls, trying to understand the control environment. And this is all still very much part of planning and understanding, because I highlight again the extent to which you rely on the controls. So whether high risk, medium risk, low risk will determine how much substantive testing you will do. So it's really important to get a good understanding of the controls within the organization. And you'll see that when I talk about controls, I'm not just talking about physical controls or controls on systems, they're just the controls in general. And when we get an understanding of the controls, the culture of controls, that all of that together, then we're able to make a good assessment of where to spend our time. Right, let's flick to that slide on here. Oops. Okay. Oops, a second. Systems and controls. Let me just go here again. Share. Systems and controls. Share. Cool, great stuff. Right, so systems and controls. Let's begin. Excuse me. Thank you. Right, okay, systems and controls. So where we're looking at the controls within the organization, it is unlikely that a company, an organization that requires an audit, you must have turnover, well, a statutory audit anyway, you must have turnover over 10 million, if you like, to require an audit for statutory purposes. And it is unlikely that you wouldn't have any controls in place. It's not like a little one-man business. They don't need audits. And even if his turnover was that high, he could, because of there are certain conditions he would also need to have if he had employees that you need over a certain number of employees, over 50, and I can't even remember the other requirement right now, the actual number. But so he might be exempt. So typically, I doubt most organizations that are requiring audits will have some controls in place, for many reasons. But I'm going to go into it now. Even when we talked about from a corporate governance point of view, it's impossible for any company that's listed or even that is thinking about raising any money not to have some internal controls, some documented internal controls in place of their systems. So documenting all their systems, documenting what controls they have in their systems, documenting what steps they're taking to manage those controls. It's just impossible. The financial director at best will be the internal auditor at worst if they don't have one. But let's kick off. So we've been very happy. Like so the reason I talked about the earlier slide is that I still have to test controls. So it's important I understand what those controls are about. So we've looked at audit evidence, and we have understood that we require sufficient and appropriate evidence. Even when I'm dealing with controls, I need to be sure, again, because I'm trying to determine the extent to which I can rely on those controls. So audit evidence applies just as much to substantive detail or physical detail to controls as well. So I need enough evidence that there are controls in place and the controls are working. So this slide again just highlights what I was saying earlier on, that if you like, our focus very much is on control risk, because again, like I say, audit risk, kind of highlighting this again, times control risk times detection risk. So here's another way of looking at it. If control risk here is high, so for example, if I can't rely on the control risk, so imagine, I mean, it doesn't really matter if this was high, let's say this was medium, I'm trying to make audit risk low. I'm trying to make the risk of me giving the wrong opinion has to be low. That's what I'm trying. So it means that I need to make this bit here really low, right? I literally need to. So this is just saying I'm going to do as much work. There's much pressure on me to make sure I make the detection risk, which is the risk that I, as the auditor, will miss something, if you like. So that's kind of how this kind of looks, right? Which is why it's really important to understand. So obviously, if control risk was low, and that means when I say control risk is low, that means they have good controls in place. So there's the risk of me giving the wrong statement due to controls being poor. Then I still want this to be low, of course. I still want to bring this down, but there's less pressure on me because this is quite low as well. So there's nothing I can do about the inherent risk of the business. That's inherent to the business, depending on whatever the business. So what I have to now look at are their controls in place, and if they have very good controls, that's really good. So many examples. We could talk about, let's take, for example, a business that has, typically that would deal in foreign exchange, maybe very volatile transactions that are happening all the time. The risk here, of course, the inherent risk here is that you have shifts in foreign exchange, and the risk is that these movements might not be recorded efficiently through the accounting system. And as a result of that, we would have understated or overstated figures, if you like. But if they have controls in place, if they have some way of doing those journals, or if they have a system that recalculates to the correct value, the closing rate on that day, and puts it through, or if someone is checking that and updating, well, that's a good control. So there's nothing I can do about that inherent risk of the business working in volatile markets, if you like. That's just one example. Okay, so this just repeats again what I was saying, so I can go through these slides pretty quickly. So the extent of my substantive testing, what I will do will depend a lot, if you like, on the test of controls, and the extent to which I think they have good good internal control system, and my assessment of control risk, if you like. And just repeating what I've said, I can place more reliance on internal controls and evidence generated within the entity. You see, again, just to kind of explain, because again, like I said, I don't have to go through all the slides. I mean, I will, but what I mean is just to give you practical examples. Let's take trade receivables, for example. Now, imagine, for example, the organization is selling goods, of course, and sending out invoices, but for some weird reason, they're not putting in the invoices onto the system in time. So because they're not putting the invoices onto the system in time, that means that trade receivables is understated, if you like. Now, it could be the other way around. They're putting them on time, but people are paying, but they're not updating the cash book in time. Whichever one, there is a problem here. Now, if they had controls in place where these were going up in time, to a certain extent, I can rely on that figure. I can rely on the invoices going in. I can say, yes, you know, I'll take a few and check. But if I can't rely on the system, then I probably will just have to call up all the customers and ask them and send them a letter saying, can you tell me how much you owed these people at the year end? So in a way, I would almost have to generate their trade receivables list externally. That's what I'm talking about here. If I can't rely on their own systems to put, and we'll talk about systems being part of controls, if you like, because the question here is, I could run my businesses have run manually before computers. So it's just, control is such a big word. It's not IT per se. It's just having everything in there on time. Okay, great. And so what I said earlier on is that typically what you would do is, this is all kind of part of your planning stage. So you have your planning, and as part of your planning, you would decide, okay, listen, we will go in, we will test the controls, maybe 3 months, document the controls. We'll come and talk about that later on, document the controls. And then once we know whether we like the controls, we'll just go in after the year end. So that's year end, and we'll turn up 2 weeks after the year end and do our work. I highlighted again, inventory is tested. Typically, you can get 2 different types of questions on inventory. So you want to be very much awake to that idea, unlike the others. Inventory can be tested on its own, purely from a controls point of view. So that's the stock take. At stock take, I'm testing for controls. Inventory is a classic case of trying to understand the difference between substantive testing and controls testing, because you cannot count all the stock. Well, I say that, but it depends on, of course, the stock in the business, blah, blah, blah. But let's imagine your standard grocery stores, or your, you know, Waitrose and all these places, if you like, you cannot count all that. You can't. So all you can best do is go in there to look at the controls over the counting of that stock. So at stock take, because typically you expect organizations to have a good way of updating, making sure their physical stock matches what's on their system, if you like, and that they are regularly checking for obsolete and things like that. And that's what you're doing. So on that day, you turn up at the 31st of December to observe their controls in place over the stock take. And post that, you come back and you can look at things like valuation and things like that. But that's a classic case. There you are. Okay, so if we could carry out an interim audit, so we would do this controls testing before we get to the final date, where we do, and this can reduce the amount of detailed substantive procedures, if you like. Again, this is just repeating everything I just said. Increasing procedures, if it's too high, everything else will go up, if you like. And then less reliance, of course, less reliance on the analytical procedures, as the information produced by the client is not reliable. Yes, again, I would probably be obtaining more evidence from external sources and less reliance on written representation. So really, controls are really about trust, if you like. They're really about trust. So, I mean, just to kind of make it a bit more real again, so that I don't just want to be going through slides. Let me give you a nice example. I think it's always a good example because it's always the first one most people training in audit will do, and that's the bank rec. So you and I know that you will have your kind of cash book, and you will have, I'm going to be old school now, imagine the bank will post to the client their actual bank statement. Now, the cash book will have at the 31st of December a figure, and the bank statement will have at the 31st of December a figure. Now, what we're expecting from, well, a couple of things actually, but we naturally know that what happens next is that I expect the organization, actually, and I expect this to happen every month. I'd be surprised. I mean, you might surprise me. I'd be surprised depending on the volume of activity. I imagine some businesses might do a bank rec every week, but I'm just going to go with a traditional month. So I expect at the end of every month another document to be produced. You see, this is a document that has to be produced again, and it's a bank rec. The bank rec in itself is a control, if you like, to kind of tie in, if you like, and understand what's going on between the balance at the cash book and the balance at the year end. So you could argue that the bank rec was, if you like, a control over proving whether or not the figure in the cash book is really what it is, right? Because we can tie that in. Now, when this bank rec is done, I would expect at some level, someone, maybe definitely the financial director, to review the bank rec, if you like, and to kind of sign, if you like, on top of the signature of the person who has done the bank rec. This signature as well, if you like, is a control. Now, if I can see 12 of these bank recs done in the year, one, if I can see the signatures of both parties involved, the person in doing the rec and the person who's saying, I've checked the rec, and I've checked, and sometimes many organizations will have tick box, check to the bank, check the bank rec. If I can see all these signatures there, then it means that I'm not even going to be spending that much time on bank rec, because all I need to do is check 1 or 2. I'm not even going to check 12. I might do the final bank rec, which we typically do again, but you can see that I have reliance on that. That's what I'm really looking for here. I'm looking for evidence or effectiveness of these internal. These are the kind of controls we're talking about, that the control actually occurred, if you like. Right, cool, great stuff. So this is again just general speak, as you can expect. Generally, there are limitations on controls. I mean, this is in any organization. You can almost think these through. This is where audit extends itself to a natural way of just thinking of what you would normally expect. There's certain things you expect things to be put on by the end of by Friday. You might have people like say, okay, there's 1 day, once an invoice is, once the customer's received the, I know everything's very much electronic now. Once the customers receive the goods, we raise the sales invoice immediately, and that goes straight into the system. Once the purchase invoice has been received, we put it onto a system. It shouldn't take a day, whatever. The key point is maybe someone's been off sick, the purchase ledger clerk has been off sick and it's not been put on. The key point here is that there are many reasons why we might have limitations on how these controls are working. So we can have human error, we can have collusion of power in circumventing controls. So we'll see a few more as we go along, but just to kind of give you an illustration. So for example, let's start at the beginning. I'm just giving you examples so that you can see it practically. An order comes through. Now, a couple of things we take for granted is that an order comes through, and you and I know that typically when an order comes through, typically the order should come through from, if you like, an existing client. So when an order comes through from a new client, we must have certain controls in place before even accepting the order. And this is what we mean by internal controls. There are controls everywhere, and a lot of these controls are inherent within the system, but that's okay. That's good. Those are controls. So for example, let's stick with the existing client first. So an order comes through with an existing client. Typically, when the order comes through, the client's name is in the system, first of all, and typically the client will have some kind of credit limit, if you like, and you will have a system that will, to a certain extent, maybe the client gets a certain discount, maybe. Now, you could say to people, "Wait, what are the controls here?" Well, maybe the client is, maybe the client's credit limit is 10,000, and the client has currently ordered £6,000 worth of goods from us on credit, and the client has now placed an order for £5,000 worth of goods. Now, the controls work such that because the client will now be exceeding their credit limit, they will not be able to place this order. Now, I guess the other control to a certain extent is, can I go in and change that? No, there must be controls over the standing order. So that's the kind of thing that we're really dealing with here, that kind of thing here. Here, this one about circumventing controls. You can have a nice scenario, sorry, when I say nice, an interesting scenario where You can have a manager. I mean, don't think it's impossible. You can have a manager working with, say, the sales ledger clerk, who will authorize, if you like, putting in of a new client onto a system, and they might be working together, if you like, and to ensure that some bogus sales order has come through, and they put it through, they send the goods, and they never receive the money. I mean, that's a fraud in itself, isn't it? We send an invoice to this bogus client, if you like, that doesn't even exist. So the client, so-called client, has got some free goods, imagine their computers, and they'll go into a market and sell the goods. So that's a type of fraud. So what we're trying to do is then sort of say, well, I mean, this is a limitation. So the key point here is that you want a different person authorizing. You want a manager authorizing new clients. He's had a look, and then he authorizes, and then the ledger clerk or the sales person can put it on the client onto the standing data. So the control is to have segregation of duty, but of course you can have two people colluding, and then we have, what can you do? You can only do so much. And then we have ineffective controls due at the organization. So again, this is the problem. You could hopefully, even if I don't go through all the slides, talking to it about it, giving you examples might help pick it up. So the key point here is that our focus is relevant to the financial statements. We want to measure the effect of these transactions. We want to, so systems. So first of all, controls occur, right? All controls are about systems. Controls live within systems. You have a system from A to B, and then you have controls at certain places. So like I just said to you, we have an order, and then you will have controls, if you like, over at the order point, if you like, and then you'll have the dispatch of goods, and you will have controls here as well. And you will now there must be control to see whether or not the client has got the goods, and then we'll see those in a second. So the key point is that controls don't exist independently, they exist within systems. So the key point is that we expect organizations to be very clear on what their systems are and what the flow should be like. And then this kind of helps us kind of understand what's going on. So every auditor must understand, all systems are different, must understand the systems through which this organization goes from ordering to receiving and collecting its money, if you like. Again, like I say, we could go on about the different types. Right, okay. The first acronym I want to talk about today, so we've talked about so far, I keep giving you these acronyms. With audit evidence, what you want to know, definitely, again, I'll give them to you as and that's why I say audit is very much about acronyms. Audit evidence, you're thinking ACA cover. Audit procedures, you're thinking, okay, AEIOU. Now, when we talk about controls, we have acronyms as well. So the first acronym that you will see again and again, typically when we talk about controls, again, I highlight that it's not just about those activities. There is a bigger picture to controls. And the first acronym I want you to remember is this one called CRIME. And we have here C for control activities, R for the risk assessment process within the organization, I is for the information system, M is for the monitoring, and E is for the control environment, right? So the E here is, I guess, environment, and the control. We just make these up to help us fit these things in, and that's an acronym that helps us to understand in general the control environment. And I think that's the first thing. So we have these 5 components of an internal control system within an organization, right? We talked a lot about the control environment. We talked a lot when we talked about corporate governance. So let's go here. An overall control in place. When I talked so much about corporate governance, if you remember, we had so many committees. Remember, we had an audit committee, we had a risk committee, we had a remuneration committee, we had a audit, risk, remuneration, Yes, I think we had one more. I don't know, it escapes me right now. But let's just stick with those three for now. But we have all these committees. Then we have internal controls. I highlighted how there's so much pressure on, first of all listed companies must have clear internal control departments, if you like, before you can even list. If you like, with a clear internal auditor who reports strictly to the audit committee. So and it's very much, and of course, remember we talked about the board and having a chair, and then we having a CEO. Those are all controls about that's kind of like your big picture control, if you like, as to how this organization is being managed. And typically, like most things, if people can see clear controls in place and a culture, if you like, for following structure, then you're more likely to have at the ground level those other controls in place. You know, I talked about organizations, remember, are built up into this kind of strategic, managerial and operational level. So the people carrying out all these strategic directions are this area of governance and kind of senior management, so to speak, governance and senior management. And that's kind of what's going on. They set the tone from the top. I guess that's a very popular saying, how they set the tone about what controls in place. And this is just the culture. This isn't just to do with the financial statements. It might be to do with safeguarding. It might be to do with the protection of the assets. It might be to do with health and safety. If you like, what policies have been put in place from the top regarding the organization as a whole, if you like. And then of course management. And if you remember, the management are the ones they're looking at kind of like 3-month budgets and carrying out variance analysis. That's a control. Those are the kind of things that are happening here. And then a lot of the things we talk about on a day-to-day basis are kind of happening here at the operational. Okay, so let's carry on. So again, this is what I mean, this idea of the control environment. This is the big picture, management's philosophy, operating style, this kind of, and it sounds quite cheesy, but I mean, but you see it regularly. The group officer or the group, the director will send out memos telling the staff about where they're going as an organization, their commitment to their values as an organization, the need to have integrity, and if they're setting that tone of integrity and being ethical right from the top, then there is evidence to show that people within the organization, then truly there's less chances of people committing fraud. There's people, if you like, if they're showing some commitment to the staff and to the values of the organization, and they're clear about where the organization is going. Then control is also to do with having very clear organizational structure, right? Very clear organizational structure. So that's all part of control and having responsibility, because organizational structure, yes, it talks about budgeting, but it's really about organizational structure. Everything we talk about when we talk about budgeting in management accounting is actually organizational structure. Because it really ties in clearly to responsibility. So budgets are merely a tool of communication. Budgets are purely the way that CEOs communicate their big picture strategy to kind of your events taking place right here on the ground in a numerical format, if you like. So they have those big aims and objectives, and then it gets broken down here from management to your operational. So you can see here, this is what's happening, and this is all part of the control environment. All of this I document at planning, right? At planning, I make those documents, and this begins to help me decide, is control risk low, medium, or high? Is control risk low, medium, or high? Is control risk low, medium, or high? Even as far as, I mean, and let's be clear, management decide the type of financing within the organization. I've seen scenarios where I remember, I mean, think of it like this. It's easy to see. If you look at someone's balance sheet, statement of financial position, and you see who their lenders are. If I see your usual typical lenders, well, I know that you're more likely to be a stable borrower. And if I see that you're within your, and because you see typically your typical lenders will, if your credit is okay, they'll charge you normal interest rates. whatever that they're charging on loan, whatever, I don't know, 6, 7, 8%, maybe whatever, 5, 6, between 4 and 8, maybe 9. But if I see that your lenders, I mean, because the lending with the supports an organization, right, is coming from the top, and there's a risk that's part of the risk. So in my mind, I can see already, I'm writing, well, you know, here in terms of the risk, I can see some risk here. So I'm thinking, okay, you know, what controls do they have over there, paying their interest rate, in paying their interest on time, and that sort of thing. So all of that gives me, understanding the nature of the organization gives me an idea as to where the issues are, or the recklessness of borrowing. Let's put it that way, you know, to a certain extent, and that makes me decide, okay. So typically, I'm looking at everything, and again, like you can see here, so you can see again, audit evidence. I have my assertions, and then audit procedures. The audit procedures apply if you understand that A, E, I, O, U. You're not using absolutely everything all the time, but I'm inquiring, I am inspecting, I am observing. So this is really important to be very happy with this language. And I'm, you know, looking at documents, I'm observing processes, of if you like, or pretty much reading what they're, and looking at the organizational chart to see they have it in place, if you like. Having regular meetings as a group, managers, how often do they meet to discuss what's going on across the different organizations? You know, sometimes people say things like they didn't know. Sometimes you have organizations, the departments that work as silos, and they say, oh, we didn't know what was going on in the other department. Well, you should regularly speak. So is there a meeting? Is there a method that allows you people to have a group, you know, meeting across the board to see who's maybe spending too much money and whatever it is? But that's what I'm looking for, to understand the control environment within the organization. How is variance analysis carried out? How overhead spread? Okay, great. The next thing we want to talk about is the risk assessment process. I meant to dig something up. I'm going to do it right now whilst I'm here, so you can see what I'm talking about. Hopefully, you should see this. I'm just going to Google this, and I'm just going to. Many organizations have different ways of doing this. I'm just going to go risk heat map, for example. Let me just pick this one up and just go to image. Yeah, I'll just clan code. Yeah, this is a good one here. And then just see if I can just make this big. Will that come out big? Yes, let's come out. Oops, no, okay, or does it come out? All right, okay, I think I'll just stick to the picture. 1 second. Oops, sorry. I'll just come back here. Okay, great. So let me just share that page with you. I'm not sure if that's showing, if you can see that right now. Let's see, new share. Yes, here we are. Let me just show you. Right. So you can see here. So every organization, I mean, there's other ones they have these things called risk registers. So every organization, what you see internal auditors doing every time is they'll go to a department and they will ask that department to highlight. This isn't just to do with finance. This could be to do with any area of the organization. This could be, it doesn't really matter, even in maintenance. What is the risk here that we will not satisfy the client? Or what is the risk that you will not get your job done, fundamentally? And what you see them do is draw a type of, different organizations will do it differently, but they're basically trying to relate the risk to the likelihood of that risk happening. And they'll create some kind of, or what you, and then what the internal auditor will keep doing is keep going back to that department and asking, have we reduced the risk of this happening? Do we need to bring in someone, if you like? Again, like I say, what is the risk of pollution? It might be a chemical industry. It might be a restaurant, for example. What is the risk of spillage? What is the risk of food poisoning? What is the risk of, you know, what are we doing to, and you will have this risk list, and people are, and organizations will work differently, but the key point is they're trying to manage their risk. So we would like to see that organizations are taking steps to manage are aware of their own risks. We talked about a risk committee. It's not always just to do with revenue. It might be, I mean, revenue, of course. What are we doing to keep on getting new clients? You know, we are heavily dependent on certain clients. What are the risks here? We could go on, but what you want to know is, what you want to be happy with is, oh, well, an organization goes about trying to assess its risks and has a clear, structured way of documenting those risks, either via a risk heat map, either via a risk register, maybe from 1 to 12, with 12 being the most likely to happen, and so I'll focus on the 12s, so to kind of reduce that. So that's kind of what we expect from organizations, to have a way of documenting the risks particular to them, and what steps they're taking to manage those risks within the different departments, because in the end, it all affects the organization in the end, even up to the extent of going concern, right? Okay, right. So let me just go back to my slides, and then get back there. All right. Right. Can you see my screen? Can you see my PowerPoints moving? Hello, guys. Can you see my PowerPoints moving? Sorry.
Yeah, we can still see.
Yeah, yes.
Oh, good. Okay, great. Thank you. Great. Sorry, I wasn't sure. I thought you lost your shot there. Okay, great stuff. So so again, like I say, the risk assessment process fundamentally is looking at how management is trying to manage those risks. Again, like I say, no one's going to particularly ask you to perform this, but you're just aware that part of the control environment, part of the idea of internal controls is not just, like I say, about just testing just controls or walkthroughs. Very popular. People talk about walkthroughs all the time. Yeah, that's just one thing. But this idea of what's your risk assessment process? And of course, this will depend again, of course, on how big the organization, if you like, how big the organization is. And typically, we would have, like I said, internal audit departments, and their whole focus is on going around and trying to identify those risks and assess those risks. And again, typically, I mean, again, in effect, what I'm really talking about here are business risks ultimately, but that's internal to the organization. Remember that I'm not there to assess their business risks. I'm there to assess that they have an assessment process for assessing their business risks. It's their responsibility to assess their business risks. I'm just there to ensure that the figures, as what you declare them, are true and fair, which is why it's really important to separate business risk from audit risk. Audit risk is purely to do with whether or not the figures are overstated or understated. That's the consequence. Business risk is unique to the client, and I just want to make sure they have a way of assessing those risks and are putting things in place to manage those risks, if you like. Right. Okay, great. Now, the next thing, of course, is this issue of, excuse me, of having good information systems. Information systems are big. I mean, I might have talked about it when we were talking about in performance management, when we're talking about large organizations using, I know definitely, Dudley, you can put your mic on. Do you guys use, I'm just going to guess, do you guys use SAP or Oracle or any of these type of big ERP systems?
No, we don't.
Okay.
Not for FMP anyway. I mean,
Okay, right. Usually large organizations will use these big integrated enterprise resource planning systems that integrate all their processes. So you imagine everything from sales to purchasing. Everyone in the organization can see everything in real time, to wages, to if you like, to trade receivables, to trade payables. I mean, I can take you to a couple of videos or sort of, but they basically have these massive systems where the reporting as well. The other good thing about this reporting is that this reporting is live. I mean, this isn't something for those of us in practice, you know, Natalie, or we would see our systems aren't. We don't trade like this. You know, I'm talking about organizations that are trading and are constantly in touch with their suppliers, and so they can actually see where their stock is, you know, where it is, and these systems send out signals. So we're talking about, you know, large organizations, which is why I thought, because Dudley's in in industry, so they can clearly see what's going on the end of their suppliers, and they send out signals, if you like, to their suppliers. I mean, even, I don't know about you, like my printer does it. My printer, I don't think I keep thinking maybe I need to reset it. I need to find out whether it's me. But as soon as my ink is low, right, my printer sends a signal to HP, and then in the post, and it comes, I think it's like $1.99 a month or something I have to pay. But that's convenient for me because I don't have to worry too much. But the key point is you have systems that are so kind of automatic and initiate kind of and process these transactions almost in live time. You can see what's going on in real time. So you can literally print out a statement of financial position in real time and see what's going on. So having an organization that has an information system, if you like, and typically it's really a management information system, so that you can press print. I mean, to be fair, Sage is an information system. These are information systems. QuickBooks and all these systems are information systems. They're keeping information together, and we can certainly get information in real time. So that's part of controls. So that's a control as well. Having as part of the and so yes, that's the key point, that we can resolve processing of transactions. We can deal with system overrides. We can see information coming in and being transferred to the ledgers. So we have a system that's actually working. And again, like I say, it's not just about getting the financial accounts. The financial statements are just the end. We have systems that are capturing all the information in real time, and that's feeding into the financial statements. So I think that's the important thing, having these information systems and integrating, and having them all integrating and working together. I have a colleague, well, when I say colleague, a high school friend who works for Oracle, and his job, I mean, now and then we speak, his job is he's going into organizations to integrate different systems, like almost tying in different systems, so they can speak to each other, so that they can arrive at the financial statements, if you like. And this is all linked to inventory as well. So you can see that it's really one big system. Someone's ordered some goods, there's ordered 5,000. We look it up, we can see in real time in our inventory, we say, oh, we have 3,000. I can see that, okay, there's 1,000 on the C's, and I can see that, okay, I have 1,000 that I can get from another. All of that can be done in real time in these systems. That's a good thing. Right. So the C part of this, crime, is kind of an important one because it's the one that people talk about a lot. The control activities, if you like. What activities are we carrying out, so to speak, to actually maintain these controls, if you like? And the control activities pretty much include all the policies and procedures designed to ensure that the directives or the control objectives are being maintained. I'll take you to a mnemonic in a second, but typically, like what you saw me, like I said, the actual activity of control, now looking either at the control or the actual documents, and the popular ones, it isn't always about technology. It's just as straightforward as authorization. Who is authorizing this thing? Is it being authorized by the right person? And that's control. That probably, I think, is one of your biggest controls. Authorization. Doesn't really matter what level. Authority could be via signature, could be via whatever it is. The key point is that oh, sorry. That's okay, that's fine. I thought it was I thought my system was calling. I was thinking, that doesn't even make sense.
I'm gonna have to unmute it.
No, you're all right. You're right. I just thought, I was wondering, I was thinking, is Zoom doing things? Okay, great. Authorization. Authorization, we have authorization here. So very big control. Again, I talked about variance analysis, performance reviews. Like I said, this is middle management. Like I mentioned that earlier on, that is one of your bigger controls, constantly looking at actual to budget. So nothing new. I'm not saying anything crazy. Information processing. So this again, reconciliation. And then we talk about physical controls. If you like, basically locking the rooms and locking the warehouse and making sure people have certain codes. Not everyone can get in. Even basically making sure only the right people have access. So in whatever world we're talking about, if it's the digital world, it's about password. If it's a physical world, it's a key. Key point is that only the right people have the right keys to a certain area. So we know we can test and know who's been in there. And then we have, of course, one of your bigger ones, segregation of duty. So typically in any system, you will have a number of processes, and you don't want the same person. I mean, there's so many examples I can use. I think a good one, I think one of the best ones I like to use is that you cannot have the same person who puts on new employees being the same person who pays them or who signs off on who gets paid. It's just not possible, because you can already see the problem. Where do we stop? The key point here is, anytime you think, if one person can put something on and then authorize it, then who's checked, if you like, what he or she has done? It's too much power. So what you want is a breakup of that process to make sure that someone is in the middle or intervenes. So typically, again here, original transaction, whatever the original transaction is, you cannot, so let's go, and that's the language. Sales order, you cannot be the one, if you like, to then authorize the sending of the goods, or it just, it doesn't make any sense. So that's the key point. Warehouse staff, restriction on counting inventory. So what happens in the stock take as well, by the way, is that again, because we're going to come back and look at stock or inventory. What happens at stock take as well is it's rare. I mean, it's only if you have no choice, but you shouldn't. So you might have observed, but I'll tell you, what happens is that all the guys who work in the warehouse are given the day off, or maybe the warehouse manager is around. And then they sometimes might even give a day off in lieu. They'll ask people who work in the organization to actually turn up and to count the stock. Because the warehouse staff, if they do it every day, they typically know what the figures are, and they're more likely to manipulate the figures. So typically, she says restrictions. It says restrictions because, hey, it's difficult in reality. That's the truth. And I mean, one of my worst, I might have mentioned it, one of my worst stock takes ever was going out to this garage. And it was a massive garage. I mean, it was unbelievable. I was thinking, I don't even know how we're going to do this. This is just impossible. They had tires, they had all kinds of equipment and kind of part finished stuff. I was thinking, so I really had to stay awake to really understand and the truth is, typically you don't get told a long time in advance the nature of the industry. Even if you knew the nature of the industry, if they just tell you turn up to do a stock take, you just turn up. So you're counting tires, and you had different types of tires and different brands of tires. So the whole thing was you had to be really careful. So you can see that typically they'll bring in staff that don't know about it, because you really have to take your time to count it. And so those are segregation of duties. So there is a mnemonic called SOAP maps for control activities, because this is very popular in the exam. You get a question that asks you, you'll get a scenario, and then it's really asking you what activity and what controls should you have in place, if you like. And typically it's really trying to get you to address these issues here. And here they all are. I think what I'm going to do is I'm going to send you. Actually, I'm not a big fan of this one. I'm going to find you a better one. But remember this for now. This time. But and I'll break this down in. But the key point here is that we're expecting kind of talking about it, we're expecting supervision. We're expecting people for there to be supervisors. That's what I'm fundamentally saying. We're expecting people to have the right trained personnel, kind of, if you like, on the job, if you like. We're expecting a certain element of people checking, and in terms of accuracy from time to time, those numbers being checked again and being added. I'll give you a nice example here with this arithmetic and accounting accuracy. Sometimes you have, if you like, sales invoice comes through. Now, again, like I say, I'm expecting a number of things. Imagine I'm expecting that when the first of all, that the client puts his order and he's ordered 100 items, I'm expecting the price to come up naturally. Two, I'm expecting the computer to give me a figure of 200. So in effect, I'm expecting the computer to carry out this transaction for me, if you like, and I'm expecting this to be accurate, if you like. Now, a discount might have been applied. I'm expecting that discount to be applied, and maybe it's whatever, a 10% discount, and therefore I'm expecting the final figure to be 190. So if you like, these are the kind of controls I'm expecting to see about this idea of arithmetic and accounting accuracy. I mean, we could talk about another situation where you have a system that's adding up things. I'm expecting the system to add up, if you like, a batch of things and get it right, if you like. So this is purely from a controls point of view. I'm expecting the system to kind of do this. Again, like I say, I'm talking in system language because at least by the time I started doing my training, I wasn't doing as much physical. I mean, just before that, I have seen cases where you didn't have this. You would have someone physically adding and signing that it's been multiplied correctly, if you like. But if the system has it as standing data, that's the control. But if someone is checking and signing that this was added correctly and these have been added together before being put, so you might have 10 invoices being added and then before they're put onto the system, and so I'm looking for a signature that all these 10 items have been added together correctly before they've been put on, if it wasn't done by a computer, so to speak. Yes, and this is what this is authorization and approval, organizational structure, so to speak, and segregation of duties. But I'll give you another one. I think there's a slightly one better than this, but it is SOAP maps, and but when it's funny because if you do audit at AAT, but I don't think any of you did. If you did an AAT, they used to have another mnemonic for this thing, and it isn't it's not a nice one, but people remember it. So sometimes, sorry, a bit of the shock is good, and it's actually OAP spasms. 2, 3, 4, 5, 6, 7, 8, 9. Yeah, and I'll extend this. And of course, they had to take this out because people complained, because of course, OAP, I don't even see this expression OAP around anymore. You're all quite young. A very popular expression once upon a time for people over a certain age, and so it was quite rude. But again, it helped people remember the mnemonic, if you like, for control activities, and I'll give that to you later. Okay, great. So there we are. So those are control activities, that we actually have in place. So as you do questions, you'll get a chance to express and use those control activities, if you like. Right, now, IT, so information technology, again, typically having IT, an organization doesn't have to have IT. You have, or great IT. They might have some information technology where all the invoices are done manually and then put onto a system. That's the first time their invoices come in touch with IT. That used to happen, if you like. People would take the order of the phone call, send, everything's done manually, and then before everything gets put onto a system, as opposed to everything being done electronic. So IT, that's why it looks like this. Now we do a lot of things electronically. So typically we expect controls, having an IT system, we expect two types of controls. And we have two categories, application controls, which are to do with the actual software, if you like. So whatever software we're dealing with, QuickBooks, Xero, Sage, we expect certain application controls in place to protect, if you like, the information. And then we have general kind of IT controls. Excuse me, sorry. Right, so application controls, again, like I say here, we expect software to have, again, as what I was saying here, depending on whatever it is, Sage. Now we have definitely payroll software. Some payroll software will have employees, their faces coming up. We expect software to be able to batch total. We expect standing data. Standing data is an important one. Arithmetic checks taking place. These are the kind of things. So basically, you have a little control, a questionnaire that's ticking the box, and you're literally ticking that. Does the software do all of these things? Does it produce exception reports? And if it does, your control risk overall, goes from low, medium, if you like. Credit limit restrictions, little things like that. The inability, that's interesting. Yes, and that's true. The inability to enter the same invoice twice without a warning. So typically, a number of things can be set within, if you go into settings, right, like in any software, you can apply a certain number. In fact, you have, this list is, you have sometimes when sometimes I'm sure you've seen systems where if you want to process an invoice over a certain amount, it doesn't let you. An exception will come up, and you need to call a manager to actually process it, or to authorize it, if you like. I guess the classic one. The classic one is that you go into whatever Tesco's or Asda or any of these fancy places, and you want to buy alcohol. It'll stop. It won't let you do it. You need to bring someone on. So the same sort of idea and principle. That's all to do with the actual software. So think of it as software controls. And then we have general controls. And general controls would apply to anyone working at a computer or anyone working with IT. We expect passwords in terms of logging in. We expect backup. We expect firewalls. Just the general things you expect. You expect general cleanouts. So we expect antiviral, that kind of thing, to make sure that only the right people have access to that information to prevent. We expect regular program changes and maintenance. In general, it talks here about swipe cards. So typically, if you have computers in a room, just to make sure that the rooms are locked and protected, but generally that's where we're going. And then finally, we talk about the monitoring of controls. So typically, this is really saying that we should have an internal audit department to a certain extent, or someone monitoring how effective are these controls. This is somewhat connected to, because there's one bit to say, okay, we've assessed all the risks, but then someone has to be doing something about those risks and about those, ensuring those controls are working. And so you typically need someone monitoring on an ongoing basis, and typically you would have, this is the role of the internal auditor. So we want to know whether the internal auditor is going around and, if you like, monitoring and looking for where the risks are. When I say looking for fraud, but being aware and awake to the potential for fraud or for these type of things to happen. Yeah, so like I said, so I think, yeah, I'll just push you a little till 11 and then I'll give you a break. So typically, we have to go around and we now need to understand the systems. So in a way, I've just finished talking about what I expect an internal control system to look like, or a control system to look like, the characteristics, and crime is your mnemonic there. Again, in trying to understand the system, you can see it says here, what procedures will I use to in obtaining evidence, if you like. So again, it's what AEIOUs am I using to kind of gain my, not ACCA cover, but a few of the ACCA cover on the controls, if you like, that these controls actually occur, if you like. Pretty much occur is your big one. There's no valuation, of course not. So typically I will inquire, if you like, and speak to the relevant people, as you can imagine. If you like, I will observe the application of controls. That's probably your biggest one. Well, sorry, not your biggest one, but an obvious one, if you like. I will inspect the documents, of course, internal procedure manuals. One of the biggest ones that you will definitely do is what's talked about, and it's one language you must use all the time, is to perform a walkthrough test. So what does that mean? You're literally walking through a system and documenting all the steps, and for yourself see what controls are in place to ensure, or just that are monitoring that. Good morning. Good morning. This is, just say hello. Say hello. Say hello.
Hello.
Hi.
Hello.
Okay. No, thank you. You said hello. Bye-bye. Bye-bye.
Ignored it.
Close the door. Close the door. Yes. I know. Once it's 11 o'clock, nothing's going on. It's just. Cool. So that's Zara. Zara's 3. She'll be 4 in September. Yeah, it's crazy trying to teach them. It's impossible. In fact, there's no teaching with her. It's just babysitting. It's just sitting there and just trying to read and trying to. There's no. That's why it's just. I miss the days of being able to just sit in my office at Chichester till 9 o'clock in the evening and just work. Now, you're working and you have someone in your head and you're trying to do something. You're like, go away. Anyway, so. Tracing a transaction through the system to understand what happens is what's referred to as a walkthrough test. Very popular. We will do walkthrough tests for all the systems, if you like. You don't have to talk about the walkthrough test. You just need to understand that I need to literally understand how your process works from order to someone paying. And you will take 10 invoices. So, I mean, this is your biggest test to see if something occurred. I will take a sales order. I will take probably, to be honest, typically, to be fair, the classic scenario here is that you will take 12 of them. I'm just seeing if they occurred. 12 of them, 1 each month, or 24 of them, 2 each month. I will take the order right from the start, and I will literally walk through and see what controls were in place on those kind of, on that order as I walk through, because it's the control I'm trying to, is the controls I'm looking at, if you like, to see how, what came up, what tried to prevent any problems happening, and that that they were authorized at the right, they were all authorized at the right level, and then they were all put on and then authorized. Again, of course, we've said it's not just about inquiry. Again, I need to, I mean, hopefully I'll get to the point where it says I need to document the systems, right? So either I'm using narrative notes or I use a flow chart. I need to be clear on how these systems actually, what they are actually. And over time, you will update your understanding of the systems. I mean, systems change, if you like, right? When I say systems change, you might have systems change, you might have adaptations to the system, you might have the same system, so you want to just make sure you're up to date with the system so you know what you're looking for and what controls are in place. Any changes being updated. Right, this talks about documenting the system. Like I said here, we could have narrative notes, we can have flow charts. We don't have to build any of these. We just need to know that how do we understand the system. Typically, remember I've highlighted before, typically many organizations have 6 systems: sales, purchasing, inventory, wages, cash, and a kind of this is wages, and a non-current type, non-current asset type way of recording, buying and selling our assets. But typically that's kind of the typical systems we expect to see. Right, and so in documenting a client system, what you're trying to do is that we typically will go around, we want to understand, like I said, everything, the control environment, with the, what's going on here, who the different managers are, and we want to kind of understand what controls are in place, if you like, in the different systems. So for every different system, we will carry out these, we will ask these questions about at these different areas, if you like. So you have these things referred to as internal control questionnaire or an internal control evaluation questionnaire. So I want to understand your system, if you like. And typically this isn't more an evolution. So we used to just go in and ask questions. We would just have a list. Does this work? Is a bank reconciliation done regularly? And someone would say yes or no, and that kind of thing. But things have actually evolved to where we now have this different way of asking this question. It's more about how do you actually ensure the system is up to date? So you're actually wanting them to actually tell you what control activity they actually carry out to ensure that they meet the objective. So I will probably spend some time doing questions next week. We have time so that we can see how this really plays out, and how the structure of those questions, how the questions look. But clients are kind of really asks how they meet the control objective. So how does the company ensure that the bank reconciliation is up to date and accurate? You see, because this is a tougher question than just saying, do you carry out a bank reconciliation? So again, like I say, it's just an evolution of better controls testing, really, as opposed to just asking, do you do it, as opposed to how do you do it. Then they'll tell you what I did earlier on. Oh, Jack carries out a bank reconciliation on this date. Moses then verifies. The financial director then does it. It happens 12 times a year, that sort of thing. And any differences are investigated within two days. And then you're like, okay, great, you have good controls in place. And this is an example here. Like I said here, this is in wages. The question can ask, it's a questionnaire, literally. You're literally sitting with someone, and typically their financial director, because you're trying to understand the controls in the business. This isn't, if you now, so you imagine you have a booklet of different systems. Now I'm on wages. I will ask, does a supervisor authorize? I mean, wages, I could ask everything. You know, who authorizes the signing on of new customers? Who authorize? New employees? Who authorizes? Who? How do we know who authorizes when an employee is leaving? How do we document that? Who checks? Is it checked? Are the details of the employee removed from the, and who checks that, and when are they removed? And they'll tell you, if you like. So yeah, so here, does a supervisor authorize all weekly timesheets? Yes, this kind of used to make sense and it was enough, but then we realized that it's possible that you can still have errors. So to push this question further, it's very much our aim, you see, because the objective, and I'll come back to this after the break, the key point here is, what is the control objective? The control objective is to ensure that we only pay those people who have worked those hours they've worked. That's the key objective. So it's more about now putting it on the client, and how do you ensure that only the hours worked are recorded on the timesheet? You see, because you could be authorizing timesheets that have extra hours on them. So it's now, then if he can't tell me, or she can't tell me how she makes sure that someone can't put extra hours on it, then they have a control weakness. Then I'm like, well, it's possible you can have people putting in extra hours. You wouldn't know, right? Because you just seem to authorize them. Then you say, no. What I actually do is I check the time cards, the clock-in cards, if you like, to the hours worked, if you like, on the system. And then I'm like, okay, that's fine. Then you reconcile that. I reconcile that every day. And we make sure we have systems in place that, if you like, people have to clock out and clock in, and we have a camera that sits over that kind of thing. And we take sample checks now and then to see little things like that. Okay, great. So yeah, I think, and then typically what we now do is, once we've documented the system, we now have to see if they're implemented and if they're effective, and then we now perform, if you like, you can see here, what we're now doing is trying to perform our tests, if you like, of control. Yeah. So what we're, again, like I say, this is not kind of repeating what we're saying. What we're really trying to do is we're trying to gather evidence, like you see, like I say, to really test whether or not those controls were applied during the period. So you're telling me that you signed, and how often, and who actually applied. Again, kind of repeating what we were saying, observing, if you like, using computer-aided techniques, but I think more about observing. Again, just repeating again, this is all repeating a lot of what was said. We're really focusing on the controls. Just because there are errors, and no errors doesn't mean there are no controls. You can have a bank rec that's perfect. If it's not signed, it could be good, but what we're looking for is the signature. So it's not about, oh, there are no errors, if you like. It's very much about the signature. Okay, great stuff. So I think that's a good place to take a break. And then when we come back, we'll look at some systems and yeah, just sort of see the sorts of controls that we see at those different points in the system, and take it from there. I also sent you a link that I hopefully will try and get through. But typically, ACCA release these technical articles. I think the technical articles are good for subjects definitely like audit and financial reporting, just because what you have is you have the actual examiner writing a bit on a topic. So just kind of reading it, just dry reading it, and just understanding what's going on kind of adds to kind of your understanding of the topic, because it's coming straight from them and they release them every year. Cool, great stuff. Let's let's go grab a tea and we'll come back at 11:15. Cool. See you then. Hi all. Yeah, I'm just observing your chat about doing a PM in September.
Yeah, I don't know.
Yeah.
I'm still not sure.
Yes. Yeah.
Tough
Well,
one.
yeah. I think you could take the Abbey approach to it, where you because I think what I think you'll find, hopefully, is that where are we now? We're in end of May. I think you'll find that by June, by the end of June, by the end of June, we should technically be tied up with the theory on audit. So we'll be just practicing questions really from July.
Okay, so there will be time.
Yes, there is time. So another 6 weeks. Yeah, I should be done. Let me just look at the textbook. So I have, yes, I mean, like, there's procedures. Oh my goodness, what am I talking about? Yes. By the end of June, I'll be finished. Yeah, because it's I've done. I mean, it's you see, this is a question thing, isn't it? So by the time I do the theory, I'm just talking about theory now. By the time I do the theory on procedures, so I'm doing systems and controls today. By the time we do questions next week, just in general, and then we do internal audit, and then the whole of June, procedures, completion, reporting. So even if it meant that I was still in July and I was still kind of, if I was tying up in the first 2 weeks of July, we're doing questions rest of July, whole of August. It's possible. It's possible.
Yeah, it would be nice to get it out of the way.
Yeah, but you don't have to take it like, you don't have to do it like, you don't have to like, what's the word? You can just treat it like a mock, but I guess it's the cost, that's the problem. Or you can, I guess the question is, if you don't do it, because this whole thing has shifted everything, wasn't it? We should have really done this right in June, and then you'd have had the summer to study for performance. Like, so you join us again you join performance at F. You do both. That's it. Oh, ouch. That could be tricky. You do. It doesn't really matter. You actually, you're right. You can wait, because then what you can do is you see for yourself. You study it steadily, and see if you want to do it with F7 in December, or you study it steadily with F9, and because F9 will be in June, you could take it in March. Does that make any sense? So there's no need to rush.
You could do it
Okay.
next March then, or in.
Yeah, because when you start F9 in January,
Yeah.
you do F9 all the way till June. So you're attending your F9 classes, but you could be studying for F7, if you see what I mean. And or what you could do is you could just attend the classes in September anyway. You could just attend them for revision. I mean, we have all the classes are recorded anyway, all our classes that we had. So it's up to you. You can just watch the recordings or attend the classes, not take it in December, or take it in December, and or just wait and just do the videos by yourself in January. Take it in March whilst you're attending your F9 classes. So you have a couple of options.
Yeah. Just know what one to take, isn't it? I kind of feel that this COVID-19 is giving me a sign, but I don't know, it's just hard.
Like what type of sign? You mean
That we've had more time to slow down with audit, so that therefore we should have time to.
Okay, yes, maybe, yeah, you can, but you know what? Like you say, there's no rush. Kind of, let's see, see how you feel with audit by June. But honestly, you won't need. By the time you do, it's a repetition. You see, when we start doing questions, the questions repeat themselves. Honestly, you just start getting used to the questions. So once you feel, okay, I've now got this, maybe I can pick this up, just pick it up and just see, am I happy to wake up and do some work on PM? Am I
The kind of motivation needs to be there, or in.
It does. PM is one of those, isn't it? It's one of those you do need. It's a trick. It's but again, there's no rush. I wouldn't say. You're not under any. You have a whole year to kind of put it in there somewhere.
Okay.
You know. Cool. Great stuff. And again, who knows? You even have the summer of next year, technically. You know, so it's not the end of the world. It's fine. You know. Cool. Let's carry on. So, where are we? Yes, here we are. Right, exactly. So what I want to do is I want to look at certain systems now, and kind of talk a little about the processes within a system, and then hopefully I'll have a look at that wages document from ACCA. So a number of things to look at, but what I'm going to do next week is I'm going to spend time doing questions on just controls. I mean, I'll tell you what questions I want to be looking at, but looking at controls and how we answer those questions and how we get used to answering them, and then you'll see that they're not crazy. Right. Okay. So because like I think I highlighted earlier on that all this talk about controls lies very much on systems. Yeah, really on the systems. Okay, great. So let's look at the sales system, for example. I mean, typically this is your traditional system. It's unlikely that I mean, I really, yes, I know we have QuickBooks and we have all these new IT sort of processes now, but typically someone still has to ask for something first. So typically we still typically we still have the process where we receive an order. And if you think of it like that, as long as in your mind you know what you're expecting a process to look like, you receive an order. I mean, nothing new here. We get the order and then we send the goods. We old school system is we call the client up, or we communicate with the client and ask the client if the client has received the goods and if the goods are what they were expecting. And if you like, if they confirm that they're happy with the goods, then we send them an invoice, right? And when we send them an invoice, that at that point, you and I know that typically a lot of these go together, but let's just keep them separate, if you like. And at that point, we hope that there are controls over the invoice being recorded in the books, if you like, and classified correctly, if you like. And we also hope there are controls about how we try and get and controls are from everything to, I mean, I would go as far as arguing, again, I think the good thing I think about audit is you can almost argue your point. I would go as far as arguing that discounts allowed are a type of control, because you want the client to pay early. You know, I mean, legal threatening your client that you might take them to court is a type of control. Reminders, whatever, these are all controls to ensure that you have received payment, if you like. Setting up a direct debit with the client is a type of control. So audit really allows you to kind of think of, what would I do to ensure that we fulfilled that objective of receiving all our money? So I guess that's the first thing I want to highlight, this idea of a control objective, sort of, and every system, your exam is wanting you to be able to explain things in the context of the objective, you see. So really what we do is, you see, because typically an exam question will be, what are the control objectives and what are the control kind of activities that we do. So everything you saw me talk about there, that OAP spasms, kind of. So typically you get a big scenario and it'll ask you, exactly like audit risk, it'll ask you to highlight all the, I mean, some questions might ask for control objectives. Some questions might just ask you, what are the control deficiencies? So they're there, they're obvious. You just see them, you're like, oh, that's a problem. And then the control activities is what they're asking you. What would you now do to kind of, mitigate those problems or solve those, deal with those control issues? So let's look at this. A control objective looks at the risks within the system. So we're looking at the system, we can see there's some problems, and then what we now do are these activities which have come from OAP spasms or SOAP maps. Control activities will then be designed to address the objective, or like the risk, if you like. And then again, like I say, to make sure, if you like, that this objective is achieved, we carry out this control activity. If you like, ultimately, that's the kind of the issue here. So this idea here, it's just language, isn't it? On the one hand, I could say, with ordering, I could say the risk is that goods could be ordered. If we don't have, I could say, if we don't have customers on our standing data, there is a risk that we could give. Sorry, give me just close this door. There is a risk that we could send goods out to customers who hadn't been vetted, and that's the risk. But for me to find the language of objective language, if you like, I need to frame it as in, I have a control in place, I have a control activity in place, but what is my control activity trying to make sure? What is the aim of this control? What is the aim of this control activity? Well, it's to, and the word, I guess, maybe to help you or guide you, and you'll see it when I show you that technical article, is this: if you can start your sentence with "to ensure," then you've got the objective language coming. If you can say "to ensure," because if a question says what are the control objectives, you want to start it with "to ensure," and then you'll get it right. You see, because then it forces you to use control objective type language. I mean, I highlight it again. The subject is purely technical. It's not difficult, because you would technically, in your mind, you already know what's going on here. So in terms of ordering, someone orders, we want to be sure, yes, to ensure, we want to be sure to ensure that goods can only be ordered by customers on our standing data. So the question then, this is one part of the question. The next question here becomes, so okay, so what control activity are we going to kind of ensure, or what are we actually going to do to make sure that goods can only be ordered by customers on our standing data? And here's where I think audit is fair. Whatever you say to ensure that goods can only be ordered by customers on the standing data is fine. You know, we might all have different ways of doing it. We might be ensure that only the customers are registered onto the system, if you like, and only that the system does not allow for the, if you like, putting on new people who aren't onto the system. Ensure that new clients have to be registered, if you like, with the financial director and vetted, or whatever it is. The question is, you're freely thinking for yourself, because you're clearly, you know what objective the control is trying to establish. Another control, again, this is an order objective, is that goods can only be ordered by customers within their credit limit, if you like. So we can see a lot of systems controls here to prevent this kind of happening. Again, let's be careful. I want to be careful here, because you see, it's so easy to assume that everything happens with technology. Sometimes before technology, definitely, I remember we had people would call up. I've seen that. People would call up, and then you would have to ask. I've seen people shouting across the room, Jay wants, Mr. Jackson wants some goods. Oh, he hasn't paid for that yet. Someone will say, should we still give it to him? And you need someone sort of saying, yes, or ask Jack when he comes back from lunch, things like that. So to assume, we shouldn't assume that the computer system will stop the credit limit from going. It's ensuring that authorization happens before that person is allowed. So that's what you want to observe, that's what you want to see, that's the evidence you're looking for. Here, that all orders are authorized, if you like, within a time frame. This kind of makes sense. I mean, you know, and all orders are processed within a certain time frame. And this is kind of going back to old school. So what used to happen was all of these orders will come through a system. Imagine they're coming through by fax and they'll be sitting there. It's not kind of like how it automatically happens now. And in fact, what used to happen was, unfortunately, these orders will come through and we didn't have a system. These people didn't have systems of checking to see whether the goods are actually in inventory. So you still get old school questions where an order will come through, you don't quite have the goods in your inventory, but Amazon's changed all of that now. So, or these portals. So you can clearly see how much is left of the product. And where your consignment is coming from. But the key point here is that these orders will come through, they'll sit on the table, and someone now has to then kind of process the orders, if you like. And that's a control to a certain extent, because, if you like, that's all part of the system, so to speak. The system is working. Excuse me. That the system is working. So that's ordering. Again, to ensure, whenever you're thinking about an objective, you want to be able to say, to ensure. What would you like to ensure with dispatch? Everything you can imagine to ensure that the right goods, that the correct goods, that the sense of the correct customer, that is dispatched promptly, if you like, that the goods are signed for, that by the client when they receive them. Nothing untowards, nothing. I think I keep saying I think what is fair in that, as long as your mind you're thinking, well, I want to make sure that the client has received the goods. I want to make sure that a goods delivered note comes back to us that we can confirm, because you see, this is what will signal to us that we can now raise a sales invoice. Because here I'm assuming that the two are separate, typically, as it should be. You know, you wouldn't raise a sales invoice because sales only occurs after, if you like, the goods have been dispatched, right? You know, you don't raise a sales invoice before, right? So that's kind of the key point there. So typically, as you and I know, the old school system, what used to happen is these goods will be dispatched and the courier will bring back the signed goods dispatch note. You now have all these goods dispatch note in the warehouse being sent, or depending on where they'll come back and they'll go up to finance. And now a sales invoice can be raised. So what you typically will have will be an order, goods dispatch note, sales invoice, 3 different documents being matched together. Or I guess the argument is that different systems, I've seen some interesting systems where on order, 3 things are raised. You have when the order is raised, the goods dispatch note is raised, but waiting downstairs or in the warehouse or whatever, and the sales invoice is kind of pending. And when the goods, a system allows for once the order has been processed, then once the goods have been dispatched, then if you like, you have a sales invoice now that is raised. And then now, depending on the nature of the organization, you now have, once the sales invoice is raised, it might be raised usually electronically, which means that it naturally maps into the ledger straight away, or we might have a completely separate sales invoice that's being printed and one copy being sent to the client and one copy being now physically input by the trade receivables and ledger clerk. And typically just the one input does the double entry. And typically I would expect that before you start sending any sales invoice that you match, you know, invoices are raised accurately and sent. This is what I was saying. So you might have a control where everything is raised at once, if you like, as it's all on one system, so that prevents errors. An invoice is matched the goods dispatch notes. Yes, I mean, again, it says here only valid sales are recorded. So typically, and you can understand here that typically we should wait really for the goods dispatch note to arrive before we rate a sales invoice, because again, we might have breaks here or errors here where the goods dispatch note doesn't quite, the goods are not quite delivered to the client, so we can't raise a sales invoice. So before you can raise a sales invoice, you need a goods dispatch note. You just need to understand what system they're using, and that revenue is recorded in the period to which it relates, if you like. So it's about having, this is more about controls, if you like, in place to ensure that all this is happening. And of course, in terms of the money being received, we just want to make sure that when the client, however they pay, yes, the money hits the bank. So typically when the client pays money into the bank, as you and I know, the client will just, let's just say the client paid electronically, it'll come into the bank. Every morning, the cashier will pick out all the receipts and send the list, if you like, to, the respective individuals, maybe the finance director or whoever is dealing with that, and they'll put in that journal, if you like, through, because the receipt of the money in itself, by sending to the client, doesn't automatically deal with the ledger. We still need to put it into the sales ledger. The cash received is allocated against the correct, if you like, the correct customer. So typically you should have a segregation of duty here. Typically you shouldn't have the same person. I mean, this is a perfect world. You shouldn't have the same person who put the trade receivable in to the ledger being the same person who records the receipt of cash. You want as little, not the same person knowing about it, to keep it, to prevent any kind of fraud, so to speak, if you like. Because all you have to do if you want to commit fraud is with the same person putting in, all they have to do is to create some kind of journal, although it might flag up, but still put a journal that an account is clear when it isn't. Yeah, and then again, as part of that whole money being received, chasing up debts and is all part of that whole system, part of the, if you like, that system trying to chase up the money, and whatever controls are being put in place. Great, so, and that's your sales, typically your sales. So all I'm literally doing is just walking through different systems. So I think to answer any controls question, you need to understand the system in place, and typically questions will walk you through the system that the organization has in place for you to then kind of then find where the errors are, or to find where the problems are. So I'm just literally walking through the problems. So what we're going to do next week is just look at scenarios and deal with the problems. Okay, great. So let's look at the purchase system, the purchase cycle, I guess is one other way of calling it. So this time you place the order. So yes, we'll come to that. So you place the order. Again, what you want to do is stick with the old school template, nothing crazy. You place the order, you receive the goods. Exactly the opposite is happening to you. Client sends you an invoice, if you like. And because you're happy with the goods, yes, you now record, if you like, debit purchases, credit trade payables, you now owe, and then you pay, if you like, you pay your supplier, typically your finance, director or whoever's in charge of the cash and head of the finance department of that area of cash, and the cashier just does exactly what the finance director does, says with regards. He says, okay, yes, pay the supplier. So again, in terms of this idea of placing the order, it's critical that you want to ensure, again, I keep using this idea of ensure. And when you do it like this, I think it starts to make a bit more sense. You want to ensure that only goods, on many levels, you want to ensure that only goods that are required by the organization, authorized by the correct personnel within the organization, are ordered. You want to make sure you're only ordering goods from recognized suppliers. So these are all the controls that we're putting in place to ensure that we're not having issues within our systems in general as an organization. Remember, controls are internal to an organization. I, as an auditor, will come in to just now see to what extent I can rely on them, and therefore the final output figure being shown there. Because if you're delaying putting on these invoices, how can I be sure that they are complete by the end of the year? Which is why it's really important to check that these things are being done on time. Yeah, because it's about completeness. Disruption leads to lack of completeness, doesn't it? So yeah, orders are placed taking consideration of delivery lead times to avoid disruption. So you can see these all do look a little bit business-like, because you want the organization in itself to have those controls, if you like, to make sure that they're getting their clients. You want to ensure that only goods ordered by the company are accepted, right? I mean, that might shock you. I'd be like, wait, how does that even happen? It is very possible for someone, I've seen it before. You had a member, an employee, order a computer through the company, and the company received the computer, but the company hadn't, of course, there was no authorization for this computer, but there was some collusion where when the computer came in, he'd just pick up the computer and no one would really notice. And then in the end, yes, it would have to be paid, but you would just be asking the question, who ordered this? When was it ordered? And it just disappeared. Sometimes you have things being intercepted at reception. That's a very popular one. The NHS struggles with that a lot. You can imagine sometimes when you're having a lot of goods coming in and out, it's very possible to miss things. Even drugs are a very popular one. Again, like I say, with National Health Service, or people putting on adding an extra batch, ordering an extra batch. So you can see here it says that goods received are recorded in inventory promptly, right? So you can see here, like I say here, this is to do with the fact that this comes back to affect inventory, because if you order goods and you don't record them in your system straight away, the goods have arrived, but they're not on the system. You will have a discrepancy between the physical goods in the building against what's actually on the system. Yeah, and here we have goods received a check to the order. So, and typically, I think, oh yeah, sorry, here it is. I was going to highlight that. Before you start paying anything, you want to make sure. I mean, this is probably one of the biggest ones. No one tends to worry too much about sales. It's with purchases. Before you start paying for anything, you want to make sure that you have seen the authorization for the order. You've seen that there was a goods received note. The goods were actually received, and you can see that we actually received a purchase invoice from the supplier, and then we can now authorize payment. So we typically want to see all these mapped together, and we don't want to pay on, when I say on time, we don't want to pay too early. We're interested in cash flow. So those are important controls as well. So invoice, we want to show, ensure that the invoice has, I would say ensure the invoice has been received. I mean, it's what it is when the client sends it, the supplier sends it, but you want to ensure that the invoice received relates to the goods actually received, and the invoice relates to the company. It's for you, and that is correct in terms of quantity, price, and discounts. Again, of course, all of that you've been given the right discounts, if you like, to enjoy. So in terms of recording, again, like I say, we want to ensure that our purchase ledger clerk is putting this information on correctly, and it's been recorded, and this signature that's all been put on all the purchase invoices. In fact, hopefully when we see questions, you want to ensure that the sales is different because we internally generate it. If you have 10 purchase invoices coming in from 10 different companies into a finance department, into a finance team, what you want to definitely see is some kind of renumbering to make sure that all the purchase invoices are put on. How do I know some purchase invoices have been received and have not been lost at the back of the file? I've seen it before. So you put those things in, you push the thing to be done tomorrow, or they're sitting on a desk and the cleaner wipes them and something happens to them because they're external, right? And then what you now have is you now call up the supplier, asking them to send another invoice or something like that. So it's important to just be sure that they are recorded in the period to which they relate, and they're recorded in the correct amounts. In the correct accounts, forgive me. again, I've said before that payments, that there's always a lot of time spent on making sure we're not paying suppliers when we don't have to. If we don't have to, when I say if we don't have to, we don't pay them more than we should, and we make the payment only once, and the payments are made on time. The payments are made on time. Cool, great. Wages, which we'll come back to look at. So old school, we talk about clock cards, timesheets. I don't think any of you, I'm sorry, you can put your mic on here. Has any of you ever put a clock card in a machine or filled out a timesheet? I'm interested.
Just when I was temping, when I was younger, I
Right,
used to do a
yeah.
timesheet.
Yeah,
but,
timesheets,
no,
but
never
clock
the
card.
clock card. No.
Dudley, have you ever used a clock card before?
I'm afraid not.
You say I'm afraid not, like, oh, and how I wish I had used one.
Yeah.
I'm afraid I just haven't come across such joys of. I used the clock. I've said it before. I worked at McDonald's and we used to clock in and clock out. It was just a joy. You put a thing in, it's you bring it out, you clock in, and then when you get there, you clock out for lunch, and you clock back in. Those were the days. So a lot of this will sound a bit odd because you're wondering, that's typically the beginning. That's a process. Ultimately, I guess we're talking about wage type kind of earnings here, and like Graham was saying, also people getting wages, timesheets and contracting or whatever it is, because that's the input stage, isn't it? That's the input stage, and that's the point where we have to verify. Again, you can naturally feel these things. You're trying to make sure that these things are authorized, because you and I know that there's so much that goes on with wages. I mean Dudley's in the field, that I cannot, even I'll be honest with you, it's been a while, because everything possible, sick pay, holiday pay, tax codes change, tax credits, different, there's a number of things that can happen. People working extra time over, not extra time, some people starting halfway through the month, people going on holiday. Whew. So it's a bit of a minefield sometimes. So it's really important that the right information, if you like, is put on. So you want to understand the client, and you want to make sure that you, at least you understand the process. So typically, the fact that this is more a computerized process is a good control already, because typically a lot of this information is standing data. Tax codes I expect to be standing data, NI standing data. I mean, payroll also brings in this issue of paying your NI on time and paying these taxes on time, and having something electronic. That I think it's all electronic now anyway. So key point here: clock cards, timesheets submitted, and then we'll talk about, of course. Then of course. There's the calculation of the pay, deduction, and net pay calculated, and any other amendments. So typically, old school, what would happen is that you would have these pay slips. Payroll is calculated, pay slips are produced. That's something else. I know at Chichester definitely they do pay slips, but they're all electronic. So they sit in a kind of database somewhere. You have to go and look for it. And I don't think people, but it was almost a proof of evidence. Once upon a time, payslip, you could actually walk around and use your payslip as a proof of who you are, or whatever it is. Once upon a time, because it had your national insurance number on it as well. And then, of course, we have to pay employees and tax authorities, and then journal those payroll costs and the payments recorded. Right. So, I mean, I'm not. Yeah. So here we are. So, 1 second. Here we are. So, again, I talk about this idea of a control objective. I think this is maybe just come again. It's not a bad slide to come back again, but you have a control objective. And whenever you think of control objective, you're trying to think, what am I trying to ensure? This is your big word there. I'm trying to ensure, you name it, you can, if you're asked to write it in this language, you want to ensure that something doesn't happen, if you like, or you want to ensure that a certain risk is mitigated. So it's still the risk, but we're just writing it in this language of to ensure. And then, like I said, an activity is designed. This is your control activity, which has come from your SOAP maps, right? An activity is designed to address that objective. So what do we have here? We want to ensure that clock cards or timesheets, if you like, are submitted. We want to ensure that only hours worked, or ensure that only employees are only paid for the hours they for work actually done. We want to ensure that only clock cards for employees should exist. That might make you laugh. And only clock cards for employees who've actually worked in that period. So typically, I mean, I think when I say I've seen a lot of these weird things. When I worked at McDonald's, what used to happen was everyone's clock card just used to sit in there. And I remember a weird scenario once where someone had gone in there, and in his rush, because you had many guys, I mean, you have guys, I mean, imagine you have Dave, you have several Daves, and then you'll have Dave M or Dave A, and Dave M will pick up Dave A's clock card and clock it in, and then at the end of the week, he wouldn't get paid, and he'll be all upset, and the other Dave would have gotten paid, and got his friend's money. So so these little things kind of, when you think about it, you're thinking, oh right, so those are the problems with these manual systems. Then I've seen other scenarios where you have people who will clock in for their friends as well, if you like, and then you have all of that as well. So they started putting cameras, things like that. But now we have things electronic, so it's all very kind of all different. So again, in terms of payroll calculations, only genuine employees are paid. Employees are paid. We want to ensure that employees pay correct rates of pay, gross pay is recorded, net pays. We have all of that kind of going on. Standing data is kept up to date. Access to standing data is restricted. Everything you kind of expect here. And that all payroll amounts are recorded and recorded accurately. The wages, I'm very cautious when I do the T accounting for wages control, because I mean, it's not a minefield, but it's a special one because so much happens there, isn't it? So you record your wages into wages control, and then you, because then you now also have to think, because again, I'm always cautious because I never fully get this right the first time, because there's NI issues and there's pension issues, and because that's bank. Yes, so the full wages, and then you have your NI kind of happening here. So that's, yes, the whole thing, that's it, the whole whack goes into wages control. And then out of wages control, we pay net wages out of bank, we transfer out NIs, if you like, and we transfer out occupational pensions, all from here into NI, and then pensions, and then from here we transfer NI, if you like, to the respective, to HMRC or whatever it is. But the key point is, you can see here that one big wages control rec has to be done every month. Definitely, and you want to make sure that the rec, when I say you want to observe, again, like a bank rec, the process is that a wage rec has to be done. The wage rec itself is a control. The fact that it is authorized or it is looked at by someone is a control. So you can clearly see all these costs coming out of the wages control. Yeah, again, these are all controls. The payments are made on time, payments are made to valid employees. So again, like I say, we're just talking about what the objectives are. You can already start to think of what control activities you would do. So yes, you have SOAP maps, but you could literally say anything that you would do to ensure that that control objective was met. And authorization is a big word that you would use all the time, right? Yes, and that's wages. Yes, I think. Okay. Oh, good. That's fine. So the next one might be the last one. I might be wrong. Is inventory. And no, sorry, there's still cash, but the last big one is inventory. Now, inventory is a rather special one, because we're dealing with goods coming in and goods going out. And we, at the same time, we still have to record, because inventory has its own sort of its own ledger, doesn't it? Because cost of sales interacts with with inventory. This is important. So it's almost like having two systems, or dare I say 3 systems. Goods arrive, so we must have a system of recording goods that have arrived, if you like. So that whole process of just recording goods that have arrived, the inventory people in the warehouse have to have their own software of goods. The goods have arrived, they then take them in, and then they kind of record them. When goods leave, we must have a way of kind of recording, filling out the paperwork for goods leaving, if you like. And technically, really, we should have when the goods arrive, when we document them, we should see those goods going onto our inventory, being recorded at the right amount and the right quantity and whatever it is. So we now know that inventories are updated. And when the goods leave, if you like, once the goods have been dispatched, and we press yes, the goods have been sent, we can now argue that the goods can come off our sort of inventory ledger, if you like. And that's me just talking about finished goods again. So really, many systems, many organizations, especially production houses, will have in the warehouse, just think of your warehouse guys as very busy guys. They will be releasing inventory to production teams. So it's not only about finished goods, you see. You can have inventory. We must have systems where the goods leave the warehouse, and then, the warehouse where the raw materials are, before they go to the team at production to do what they need to do. And we must also have a way, again, the one that's not anyone's favorite, of measuring work in progress. Just long and tedious, because these are goods that are partly finished. So we must have a system of measuring part finished labor, whatever raw materials have gone in, and these systems have to be regularly updated, if you like, so we know really what's the value of goods there. Okay, great. And then, of course, inventory has the issue of being safeguarded from theft. Remember, we're talking about controls. I'm not talking about valuation now. I'm just talking about controls per se. That this inventory is received and dispatched on a timely basis, that all inventory is recorded. And I'm talking about the controls over how we value inventory. So it means that regularly inventory is inspected for obsolete goods and written down. It's the controls I'm interested in right now. And only inventory owned by the company is recorded. So you might be wondering what's going on there. It's possible we might be holding inventory. So we might have sold inventory. So the inventory should now come off our system. Client might tell us, listen, we can't quite take the inventory. It's the weekend, we're closed, or whatever it is. So can you hold on to it for us? Right, and that's important that inventory has come off our system, if you like, because it's now being sold. It's no longer ours, but it might be sitting in the warehouse somewhere. Yeah, again, and that's kind of your scenario. Yeah, I mean, again, good control systems. We talk here about automatic ordering systems. This is now very normal. And yeah, I mean, you can do a test. I mean, this is what we can do to sort of see, you know, we have scenarios where you have, this is your inventory level, and you might have a reorder level. And so inventory, so you have, these are your days. So Monday, Tuesday, Wednesday, Thursday. So inventory is falling. Then as soon as inventory hits this point, a signal gets sent out. But sorry, the signal gets sent out. So it's still falling, but maybe the signal gets out and the goods arrive within the day. So that goes back up to here. And so you have this kind of process happening. So, I mean, this is just extra. I mean, someone might be going in and checking and calling up the supplier, but having this system means that the client doesn't run out of stock. Or having, I mean, I don't even, I've even talked about a FIFO AVCO, using the appropriate FIFO AVCO method to make sure stock doesn't go obsolete. Just having systems in place and to ensure that these things are happening. Okay, great. So again, other controls, secure warehouses, CCTV. I mean, I'm sort of highlighting some of the tests that you would do. Again, like I say, I want to ensure that the stock is secure and protected. What do I do? Visit the warehouse, inspect CCTV to check that it works. These are just other things to do with inventory. So you're just reacting to the question to see what you would do to inspect. And you can see I'm trying my best to use the AEIOU language. Suitable insurance for theft or damage, inspect insurance policies. These are all controls. I mean, controls are, again, like, I'm not just about counting, but what is likely to lead to a potential devaluation of that inventory, if you like. Yeah, I mean, again, just goods received notes and goods dispatch notes to ensure that this inventory is the system is being updated as soon as the goods have been received or delivered, as I said earlier on. Yeah, and as you can imagine, you would expect that, I mean, an organization needs to decide how it's going to make sure that its physical inventory is what is equal to what it's saying on the system, because for whatever reason, stock goes bad, stock gets stolen, so you think you have 10 boxes, but you only have 9. Your system is saying that you have 10. Imagine your system now, someone wants the 10th box, because your system is telling you have 10. The guys upstairs can see 10, but they go down to the warehouse and it's not there. So that's not good. So really, you want to make sure that you decide either you count 1 row every month, or you do your stock take regularly internally, just to make sure your records the system is up to date, because that's what's feeding the management information systems, as opposed to making sure you're checking. And again, like I say, lots of these things here, but lots of different things. I think this is the last one, the cash cycle. And this typically is what we expect, that the cashier typically will request for payment. And typically the finance director will authorize it, and then you have payments made, and then that's recorded. And kind of the reverse as well. Either we've received money, it lets the finance director know, and then it's recorded. And that's typically your case. So typically we expect, I mean, now more and more we see that the controls here are becoming, because banking is all online now. This is the olden days when we had petty cash. I don't even know if organizations still do petty cash so much. Actually, we do, to be fair. We do for milk and things, but yeah, I think we do. And for presents, little presents like that, we still keep a bit of petty cash here. But again, it's ensuring that the finance director or whoever's in charge of, the financial accountant ensures that payments are only made, and will ask to see the backup to any payments being made, if you like. And hopefully, if it's in the bank, we have that solution. Again, like banking receipts, this is a scenario where you have cash scenarios, and of course, making sure and cash movements are recorded on a timely basis. So the updating of the cash book, pretty much. Yeah, so I mean, typically having a system for making payments, if you like, so an invoice has to be raised, or a little sort of expense claim, if you like, for whatever reason, and that's kind of the system. An impress system is very much a limit, isn't it? A set limit, and making sure that people fill out those vouchers if they want to buy milk or something like that, so we can then add up and see what's going on. Typically, cash withdrawals, of course, only authorized by managers, and again, typically many checkbooks will have all these things. You have typically need 2 people's signatures. You need 2 signatures to make this sort of happen. Yeah, again, nothing untowards, everything you would expect if whoever has access to the online banking, secure passwords and PINs, and assess level of seniority. Right. Yeah, I think that's kind of the main point. Finally, it's important that we should be able to communicate deficiencies in internal control to those charged with governance and management, because remember that the internal auditors answer to the audit committee. That's the key point, and they want to be able to highlight these deficiencies without feeling under any duress to to management. I mean, management are responsible, those charged with governance are responsible for internal controls. We saw that when we talked about, when we did a lot of the work we did on corporate governance. And typically, yeah, and so regularly we should meet with the internal auditors should meet with their the audit committee to discuss these matters. Yeah, so this report, traditional is yeah, if we find any discrepancies in the audit process, we typically will write a letter, a report to management, and this is done at the end of the audit process. But that's kind of the yeah. So I think that, again, like I say here, these deficiencies are very much really for the use of the company only, and yeah, we shouldn't be letting anyone else know. This is what's happening internally to the organization. So this is a kind of example. For example, you will see when you start doing your questions, you'll pick out it's a what is the deficiency, a consequence, and a recommendation. Classic question, and you'll have loads of deficiencies to pick out. So typically, you just picking out the deficiency is a mark in itself, half a mark. So typically, these will always be half marks. So you have 1.5 potentially, and it'll ask you to pick out 6 or 8 or something along those lines. So it says purchase invoices were missing from a sequentially numbered invoice file. So if you don't, I said the same thing with audit risk. If you don't, if they don't ask for the consequence, you still write the consequence underneath. So you always state the consequence of a deficiency, always. Now, if purchase invoices, like what I said, purchase invoices are likely to, because with the purchase invoice, when it's coming from an external party, so they'll have their own name and whatever it is. So you will now label it 1. Next, this is Mr. A supply. B supply, you will now label it 2. So for completeness, to make sure all the invoices are put onto the system, so we don't get fined or we don't have any issues, we want to make sure they are complete. So because you see, they get put onto a system, right? And then it's debit purchases and credit trade payables. So if you don't do it this way, chances are you'll have some problems of completeness. So it says here that all invoices should be sequentially filed on receipt by the accounts department. So as soon as you get it, you should either be putting a stamp, invoice received, number 2 or 002, or whatever it is. Again, like I say, you can then you then come up with an idea as to how you would. The question could have said something like control objectives, and you'd have said to ensure that all purchase invoices received are put onto the system. So that's completion. So and then what your recommendation is, your control objective is that they are sequentially filed or sequentially recorded. Cool, great stuff. Right, well done. Number of slides, but that is still a cool. Hopefully it's not been too tiring. So let me just take you very quickly to yes, this article. I'm just gonna run through it so you can sort of see the sorts of things that I was talking about. Let me just take you to my new share. Okay. Right, great stuff. So I sent you this link. Sorry for the noise in the background. And this link talks a little bit about the audit of wages. Excuse me. Wages are a very popular question because, you know, this is quite a normal, this is a balance that typically is audited. It's a system that's audited a lot. And so typically, again, like I said, you're looking for evidence for controls, and you're actually looking out to carry out substantive evidences as well, as in actual detail, test of detail. So, here we are. So some of the things it says, much of the audit work on the wages system may be performed in the interim audit. So just to kind of take you through again, see through detailed controls testing. So again, like I say, a lot of the controls testing happens before we actually get to, if you like, before the actual final audit. So at interim, we're doing a lot of controls testing. As due to the nature and the volume of payroll transactions, because there's so many, the auditor is likely to wish to place some reliance on the company's control system. However, some substantive procedures to confirm will form part of the final audit. That's quite normal. We will still do some work at the end. And so interim work will be some normal stages of recording and testing internal controls. I mean, look at some of the objectives. To, again, like we've just said, and I just highlighted to you that audit is purely language. What you want to say when they ask you what are the control objectives, who knows, you get a random question. Name some control objectives you would expect for wages. We want the controls to be able to ensure what are we trying to aim for. It says the auditor will firstly consider the objectives for which the control activities should be designed to achieve. So control activities, OAP spasms or SOAP maps, what are they trying to achieve, if you like? What are the assertions, if you like? So we want to ensure a number of things here. This is directly from ACCA. You can see here it's ACCA Global exam support. So, I mean, if you're reading this article, please, you really get to understand how to deal with, because we'll look at you, as you see at the bottom, you'll see that if you get a question like this and you write like this, you're there. We want to ensure that all wages are authorized, only paid to valid employees, only paid for the work done. So it's being able to catch these little points that are obvious that you take for granted. Correct rates of pay, correctly calculated and correctly recorded, and ensure that the deductions are sent off to the right parties. So here in terms of looking at the control system, evaluation of the control system, he says auditors often complete questionnaires to help them in evaluating the systems. ICQs are specific questions. ICQEs, EQs, which I was talking about, referred to as focus on risk rather than objectives. So they cover the same areas, but what are we saying? Can the employees be paid? We're asking these questions. Can the employee be paid for work not done? Or how do you ensure that the employees are not paid for work that they haven't done? Can wages be paid to fictitious employees? Can authorized wages be paid? Can wage costs be incorrectly recorded? So what we're doing is we're trying to see if we can rely, if we're getting no, then I can rely, if you like, on the system. Okay, great. So here are just 5 stages, if you like, and the typical controls linked to these relevant control objectives. So typically, as you know, there's a good, strong relationship, of course, between HR and payroll. So the HR folk are the ones that actually set these people up. You can see here, it all sounds a bit obvious, but you really want to make sure that in a wages system, you have the setting up of the employees, and these should be completed in the human resource department, contracts of employment, changes to standing data on the master file should be performed by staff who are independent of processing payroll. Really important. I'm sure you knew that anyway, that it is not the guys who process payroll that take people on. So there is a clear segregation of duty. Segregation of duties between HR and payroll, if you like. And so what are we expecting to see on their file? Their name, address, the correct bank accounts, date of starting employment, employee number, tax code, that sort of thing. So in terms of controls, you can see here, changes only authorized by senior members, access to that master file, really an independent check should be performed, if you like, on standing data support documentation. So you can see that the controls that I have in place I'm putting controls in place to ensure you're really reacting to the objective. So here are some others. I'll just go look at calculation of wages. Hours worked should be converted to a gross wage by reference to the employee hourly rate. So software typically does this. So that's a control, if you like. So overtime hours should be reviewed and authorized. Validation checks. Exception reports should be processed for anything exceeding a certain amount. We should be able to look at it for anything exceeding over such a number of overtime hours. It should be able to come out. Yeah, so there's a number of things here, looking for people who are ghost workers, if you like. But where I want to take you to here is these are the kinds of things that you'll be looking at. Here you have typical tests of control and substantive procedures. So here's my objective. My objective is to ensure that employees, this is where I'm really going, this is a typical exam question, to ensure that employees are only paid for work done. Test of control by observing clocking on procedures and the level of supervision. That would work. And what would I now? So this is my control. Now, in terms of actually checking that only this is done, I will select a sample of employees from the payroll and agree hours to their individual clock cards. So just look at the entire system, right? Look at clock cards and look at, if you like, the actual payroll ledger to see what's going on there. To ensure that wages are only paid to valid employees. This is one way, I guess, attend the wages payout. Again, this is not common. This is, you can see this is an old document. This is when you still gave people their checks in cash. But again, I can still do a walkthrough. In terms of control, I probably would go for authorization, if you like, to see that the financial director has checked all the employees and signed off, to check any joiners, leavers, to make sure that only valid employees are on there. Again, the substantive test of detail, here I'm looking for authorization. Here I can observe, but authorization is a test of control. Substantive, I just wanted to look at the actual amount. So I'm really now looking at a sample and vouching to the individual contracts of employment. That's not a control, you see. The control is I attended, I observed, or I saw an authorization. That's the control. Ensure that overtime paid is for additional hours required by the business. What control? I just want to see this authorization ultimately. That's it, pretty much. Authorization is always going to be a big one. If you like substantive procedures, well, I actually want to look at amount. So I'll take a sample, look at the overtime, calculate it times the overtime rate, and investigate to see if it's equal to the amount that was paid. We'll look for any differences. And so you see, you have this type of thing going on in terms of test of controls and substantive procedures. I could do some more work if you like. Typically, a lot of analytical procedures happen here. I talked about the proof in total. If you had 10 workers last year and this year you have 11, I will take out to start from last year, add on an extra worker, put in inflation, and I expect to see, you can see here, perform analytical procedures of proof in total. Very big for analytical procedures. It's a substantive process test. You want to remember this phrase, proof in total, very popular. And kind of analytical procedures month to month, sorry, year to year. I want to do a reconciliation, definitely. And just basically walk through to make sure the money was actually paid out of the bank. But I'm basically carrying out my reconciliations of the wages control account and looking for any fluctuations or variations. Cool, great stuff. So what I would like you to do is to please read this article. It's a good article. It'll help you so that when you start doing questions, that will start to settle. In terms of exam kit questions, I would like you to please have a go at questions. So 1-6. Let's see here. 1-6. Yes. So if you have a go at 167, 167, and 167, and yeah, I think so. Yeah, why not? And 166. Let's have a go at those ones. Yeah. Now, or let me put it like this: those are the ones I'm going to do in class, and I think I might have done. I mean, really, what I would like you to do is just that sometimes we need to do a bit more work, but it's not a bad thing. I think you can even start from. Yes, I'm asking you to do 166. Sorry, 166 and 167. But what I would think would be great for you to do is just to have a go at 164 and 165. So ultimately, think of us trying to do 164 to 167. Don't worry so much, again, like I say, just you put your own answers. Sometimes it'll say, what test would you carry out to confirm cash? You think, well, I haven't looked at particular tests. It doesn't matter. Just have a go. And when you look at the answer, you see you're not so far away. You can hear them screaming. The frustration is beginning to build in. I'm going to have to take over my home. I start the homeschooling process. I take over at 1:30. So this is the nature. This is the new world we're living in. 168. Yeah, I think so. I think that's a good thing. So technically, I would love you to do 164 to 167, but we will go through particularly 166 and 167 in class. And please feel free to send it me whilst you're working on it when you finish them. And it just means that when we're going through it in class, we can really take it apart. And who knows, have more time to do others. The last time I tried that, I think we spent the whole class doing like 1.5 questions. It took a while actually teasing it apart. But cool. So that's the plan. So now we will apply what we've just learned in these questions, and then carry on with the following week. We'll carry on with these internal audit, and then you see, then we'll move on to audit procedures. You see, because you see, we haven't done audit procedures yet. I haven't told you how to actually carry out tests of detail on trade receivables or inventory. No, that's in audit procedures. Right now, we're still focusing on controls. Although some of the questions, because they're exam questions, they include some audit procedures, like from substantive testing. So don't worry, just have a go. You've got nothing to lose, really. We're still coming to do it, but take it. I think that's a good place to stop. Cool. Is that good?
Yep, sounds great.
Awesome, guys.
Thank you.
Great stuff.
Yeah,
Thank you. Great stuff. Cool. Have a good weekend.
Hope you feel better soon.
Oh, yeah,
Yeah.
can I ask a question quickly?
Yes, of course.
My manager's obviously asking, due to the extended term this year, are we going all the way through summer?
Yes, we are. Sorry. Yes, we are. Sorry, forgive me. Graham asked this question because what's the called? Zoom doesn't allow you book more than a certain classes at once. We're literally going through the summer.
That's fine. Okay, that's absolutely fine.
And yes, a few more little things. We're still working out. We're still trying to. I think what I'm trying to do is, because how it works with Hillary is, this is how it works with Hillary. If you propose, because even this ACCA course, I had to kind of propose it. We never used to run the ACCA course. It was just something I wanted to do, so we push it, and Hillary has always been very supportive. What I'm trying to do is I'm trying to set up and trying to sort out this teaching online. I'm just trying to improve it the way we do it, because come September there seems to be still some confusion. Well, I mean, like all things, they're still planning. I won't say confusion. I think they're still planning how we manage social distancing in the new normal. So what I want to do is I might do it, or I might get Joe to do it, but my advanced tax students, I mean, I know some people love being in a classroom, but I think if you get online teaching right, I think you can ask the same questions, and I think you can ask it. It can just be as personal online as in the classroom. But we're waiting to see. So what I'm trying to do is see if we can improve it so that even if it meant that it wasn't because of this whole spacing, if it meant that you did 3 classes online and then one at the college, because everything is being, they're trying to get some classes in on some days, some classes in on some days, just trying to stagger the whole thing so you don't have all these people at the college at once, and then it becomes this disaster of a resurgence of the virus. So I'm just trying to, I'm thinking about it and working on it. At least we have the summer so that we have a balance of online and in-class environments so that you're all healthy, because, I have to be respectful of your own people have, personal issues or with regards keeping safe. So we don't want to force everyone in and say, we're still working on that. So regarding that, I'll keep you guys in the loop as to what the plans are for September start. But we start as normal in September. It's just how we do it. So you guys will carry on with F7 in September and F9 in January. It's just deciding how we go through it. But we will run right through to the exam this summer.
Brilliant, thank you.
No worries. You're welcome. Cool, great stuff. Cool, great stuff, guys. Thank you. Have a good weekend.
Thank you. Thanks, Ryan. Cheers.
See you later. Cheers.
Are you okay to hang around for a minute afterwards?
Of course, yes, of course, James. Yes, we can talk. Okay, great. See you later.
Bye, everyone.
Bye-bye.
Bye.
Bye.
Bye-bye. Are you all right, James?
Yeah, not bad, thank you. How are you?
I'm well, buddy. How is Rihanna, your friend?
She's good.
Good.
She's good. Yeah, just I think she's been furloughed. So
Is she back? Is she back in the country? I know I always ask this question. Sorry.
Yeah. She's working at Goodwood.
Okay.
For aviation company.
All right. Okay.
Yeah. So my work when I joined, they took me on as a level 7 apprenticeship.
Really?
Yeah. And they did the same with Zach as well. And but they've only just found out that I don't know if they've just found out, but they've only just told me that they've found out that I don't qualify for the level 7 apprenticeship because I'm a finance graduate through ACCA. So they're trying to, obviously they've now had to foot the bill of college rather than reclaim some money back from the government.
Oh, I understand. Was that why when we suggested, yeah, because I think we had this kind of, because because they've been paying your fees since, I remember that.
Right.
And I thought that was because they just didn't want to go on. What was it, Zach? Who was I speaking to? They just couldn't go on to the apprenticeship because, but this is why, because you guys are graduates.
Yeah.
But you know something? I know who's on the level 7. We have, okay. So you're telling me that if you have a degree, you can't do a level 7 apprenticeship? Is that what you're saying?
You can't do it. You have to repeat some of the exams. You don't get all of the exemptions.
On an apprenticeship?
Yeah. So
right.
They've said to me that as they've had to foot the bill of all of the college and everything, they're not happy to give me a whole day off now as studying.
Okay.
Which is set out in my contract.
Okay.
So I'm going to leave and find a new job. But I was just wondering what that means in terms of like studying. If I start a new place and they're willing for me to carry on, do I just carry on as normal or?
Yeah. Fine. That's fine, James. I'll tell you what I think. Do what you have to do and just keep attending the classes. Just keep attending. Okay. And then once we, doesn't matter whether we do them online or in the college, just keep coming through. And then once you're settled with what you're doing, that's fine. You just let me know, and then we do the paperwork. We can deal with enrollments and things like that. It's better you're getting the knowledge so that you're dealing with the paperwork, people can backdate stuff, so that's not a problem. Yeah. So what I need to do though is I should send your people the well, that's fine, because that means that they're happy to pay your bill for audit, right? Because we haven't.
They don't know that I'm leaving yet. So.
Oh, right. Oh. That's fine. So what we'll do is we'll send out the paperwork because what I wanted to do was I wanted to get this online thing running properly before I sent out the invoices, because I haven't sent out the invoices for audit. Also because we at the time we weren't quite sure. So now that we've extended over the summer, we're clear so that the client knows that, because you see the problem was it was difficult to charge the same thing if we were going to stop in June and move online, if that makes any sense. Yeah. So because we're now carrying on, we can just carry on with our bills as normal. And so I'll do the paperwork anyway. And we'll deal with that. But regarding you attending, just keep attending. And I'll leave you to deal with, once you found a new job and you settle with them, and then you just negotiate, they might, you would have to negotiate. So for example, if you say that I've been attending classes, it doesn't matter. As far as I'm concerned, technically you could argue that, listen, you can tell them, listen, I've made an agreement with the college that I'll keep attending. What are you guys willing to do? Are you willing to pay whatever, whatever the study agreement is, you agree with them, but you just keep coming, attending the classes. You're still a member of the of ACCA, so just keep attending the classes, pay for your exams. Don't worry so much about paying for the course. Post your firm technically would pay for audit, but for September, if it's not sorted by then, keep coming, and then let's see what happens by December. Hopefully things should be settled by then.
Sure. Okay. No, that's great. Thank you very much.
No worries. Awesome. Cool. Great.
Okay.
Cool. See you
next week.
See you next week. See you next week, James.
Thank you very much.
No worries. Bye-bye.